Okay. We are about to be live any second. Any second. Come on. There we go. All right. Good, 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 good. Alrighty, alrighty. Getting ready to get started. How are you guys doing tonight? Brandon's here. How's it going, Brandon? All right, all these people joining along. Yay. The man, the myth, the legend. Woohoo! Yeah, that's me. Yeah, I try not to get too full of myself, but that is what it is. Gonna say hi to all these people. Hey, hey, hi, 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 hey, hi, hi. Is that Jessica King's here? Hey, hey, hey. You know what time it is? It's, Hey, boys and girls, you know what time it is? It's howdy doody time. It's howdy doody time. Bet you not very many can figure that one out. All right, Chamsey. Sexy. Foolishness. All right, we're getting ready to get started. Why not? Hey everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for that safe, predictable, and consistent 1% per week. Now, the trading strategy I came up with. Sherry, how are you this evening? Good evening. Chipotle and IBM increased significantly after hours. Cool beans. All right, bring it up a little bit, Sheila. We'll talk about it in a little bit. Let me get through the disclaimers, keep myself getting out of trouble or getting in trouble, one or the other. Number one, I am not a, it's dividend stock o'clock. Hey, Jessica King. Okay, so I'm not a financial planner, okay? I'm not a money manager. I'm not an accountant. I'm not a lawyer. I'm basically the guy down the street, who knows lots of weird stuff. That's it. Just a strange guy down the street, lives by himself, knows a lot of weird stuff. That's who I am. Don't believe a word I say. Please check out what I say and do your own research. Okay, we need some fact checkers on this kind of stuff, because I firmly believe that we have the right to know. And that's one of the reasons why the administration don't want us talking to each other, because they don't want us educating each other with weird, because see, I know a lot of weird stuff. All right, great, fine, dandy. But there's stuff that other people know that I don't know, that I want to know, and they don't want us to do that. So it is what it is. GD, how are you doing this evening? Okay, so as I was saying, anything I say, please go check the references, do some fact checking. It is what it is. All I'm doing, I'm reading the numbers and I'm interpreting the chart the way I see it. I like things that are simple, safe, predictable, consistent. I like things a little on the boring side, you might say. You know, because I'm old school. I write stuff down. I look people in the eye. I shake their hand. That kind of scenario, that's the world that I live in. But not everybody's like that. So I like to keep things simple, safe, predictable, consistent. The trading strategy I came up with in '08 when my 9-year-old daughter wanted to learn how to trade. Would you be open-minded to strategy to improve your technique? I would love your thoughts on it. Infinite Sky. Awesome, dude. DM you with a phone number or give a call. We'll have a nice chat. I'm always looking to find out more information. Okay? Dorazik checked in over there on Instagram. How you doing? Jeff. Why to go? I don't know what why to go means, but alrighty. Lucky Larry signing in on YouTube. Woohoo! Alrighty. So let's get started. We got that all out of the way. Now, when I say in 2008, my 9-year-old wanted to learn how to trade, well, I was doing something at the time not very many people were doing. I made exhibits for museums, aquariums, and then I brought them down to the home hobbyist level, which nobody's ever done before. Fine, dandy, it started throwing all this money at me, so I had to figure out what the hell do I do with it. So I started investing. It's simple, it's easy, it's predictable, and to make it a strategy specifically for my daughter, it had to be simple, safe, predictable, consistent. Oops, way to go. Just listening. All right, Jeff. So that being said, here's the 5 criteria that I had to, that was my challenge to overcome. It had to be simple, safe, predictable, consistent, and no way that she could lose money. Remember, we're talking about a 9-year-old little girl. If she lost money, she would start crying. I would feel terrible. She would go to her mom, then her mom would come in, and that couch is not as comfortable as you'd like to think it is. But you know the story. Okay, what do you think about cash secured puts to acquire your shares, selling coverage calls after? Infinite Sky, I love that strategy. They call that the wheel strategy. Okay, don't get me wrong, I like it. However, I don't teach it here only because I want to stay true to the actual 10-minute trader strategy that I created for my daughter. It had to be simple. Once you put cash secured puts into the equation, it's no longer simple. You're adding another ingredient. Now, don't get me wrong, it does add to the right return on investment over the long term. But at this moment in time, let's just get the people set up with simple, safe, covered calls. Covered calls is one of the absolute easiest, simplest, safest strategies there are. You buy a stock at a certain price, you sell somebody the rights to buy it from you for the exact same price, and you collect what's called a premium. We're going to go over that in a little bit. But the premium that I like to look for is 1% or more per week. So if I'm doing 1% every single week, that's over 50% per year. Okay, so I have, worked since I was 13. Okay, so I'm from that era. You want to do that era. Yes, I'm from that era. At 13, I had my first job, and nobody ever taught me about money. So I knew at some point in time I was going to need to retire, and I had to figure out what I was going to do for retirement money. Because hey, we're the only species on the planet that actually have to pay to live here. All right, so over all those years I worked, I came across a strategy when my daughter wanted to learn how to trade. Simple, safe, predictable, consistent, all that kind of nice, neat stuff. Do you have a Discord channel? Yes, I do. Thanks so much for your thoughts. I love the videos. I'm getting ready to implement your way. Alrighty, Infinite Sky, seriously, give me a holler. Drop me a number. I'll give you a buzz. We'll chat and see if there's something that that we can add to it to make it a little easier for other people to get involved. I'd like to turn this a little bit. There we go. I got a new setup. It's kind of nifty. All right. So that being said, you get the 5 criteria. All right. Simple, safe, predictable, all that kind of stuff. Now, I had to come up with 5 rules. Rule number 1: never buy something you do not want to own long term. That means go into the trade thinking you're going to buy it and you're just going to hold on to it. Great. Hey, Doc, how's it going? So that way, if and when the stocks go down, because if you're thinking you're going to buy something and it's going to go up, yeah, you're sadly mistaken. It goes up, it goes down, and we have no control of where it goes. We can just, YouTube works, cool beans. So we have no control over what's going to happen. Only thing we can do is set ourselves up with a winning strategy. Okay, so a winning strategy is buy a good stock when it's low, sell it when it goes up. So the trading strategy I came up with for my daughter is take a look at when they're paying their dividends, because stocks have a tendency to go up just before the dividends. Well, great. Let's put them into a calendar. Whoops. Okay, here's the calendar. Okay, when the little green dot pops up, that tells me when the stock is having its dividend. And you can get this information anywhere. Okay, EX dividend date calendar. Put it into Google search. It will show you what stocks are paying their dividend on what day. So here's the thing. If I know that General Motors stock is going to go up 2 weeks before the dividend date, well, then why the hell won't I take advantage of it? I like 2 weeks and on a Monday. This way I can buy it. I can buy the stock, I can sell the covered call, I can collect the premium is worth 1%, great, the stock moves up just before the dividend. I like to get my 1%, get out, say thank you very much, I'll see you in 90 days. Long term, for me, long term, 9 months, that's the longest I've ever held anything. And I didn't do it on purpose. I bought Target, I bought PPG, I bought, hold on, one more, Kimberly Clark. So Kimberly Clark I held on to for 9 months. I didn't want to. I bought it. She went down, hovered on the bottom for a little bit, made me a little nervous because, hey, that's my money. Then she turned around, came back up, leveled off, and I got back out again. That's all stocks do. They go up, they go down, they go up, they go down. They do not come to your house, wash your dishes, fold your laundry, put little candies on your pillows after they make bed. No, no, no. Stocks go up, stocks go down. That's all they do. The only thing we can do to take advantage of it is to know when it's going to move. And if stocks move predictably every 90 days just before the dividend, well, that's a little bit of information that could be valuable. Okay, so if I knew it was going to go up 2 weeks before the dividend date, great. So I'll buy it 2 weeks before the EX date, and then I'll sell somebody the rights to buy it from me. That way, collecting that premium, getting that percentage. Who's training? Where did you learn? Oh, Cali-san. Now you're saying, where did I learn? I learned through the school of hard knocks. Brother, sister, whoever you are, I've lost more money in 1 week than most people make in a year. Okay? I've made more money in 1 week, in 1 day than most people make in a month. So I paid my dues. Okay? I've been playing this game since the entry fees were, what was it, 1 1/4 to get in, 1 1/4 to get out. That's 250, $250 per trade just to play the game. I've been playing for a long time. You guys nowadays, you get that free trading. You get that margin money available. You got the fractional shares. You guys got it made. I had to go through this crap when it wasn't as easy. So anyway, I found the strategy when my daughter wanted to learn how to trade. Okay, fine. Okay, so the rules: never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has increased dividends, consistent increased dividends. Me personally, I like 20 years of increased dividends. Rule 4, make sure there's weekly options because I want a weekly cash flow. That's what I do. Don't get me wrong, monthly's okay, but I would prefer to get a check every week. And then number 5, make sure the numbers work. Now we're gonna go over the numbers in a minute, just so you know what I mean by make sure the numbers work. So here it is. You have 9,590, oh, it was 88. I know, we checked the other day. 9,500, I believe it was 88 stocks available any day of the week, trading week, to trade. Is QQQ keep dropping? I honestly don't know. I don't do the Qs because it doesn't fit the parameters which I'm trying to explain. Okay, so I see now I lost my train of thought. Anyway, let's move along. So we take all the stocks that we like. Consistent increased dividends. Why do I like this? Well, if they consistently increase their dividends, Ben, that's what we're going to get to. But we're going to get to that, Ben, in a little bit. So if the company consistently increases their dividends, it means they're profitable because the dividend is nothing more than the profits the company shares with the investors. Okay, we're going to look at VRT. Give me 1 second. VRT. Okay, we'll take a gander at it. Hold on a second as I'm finishing my explanation. So when I say 20 years increased dividends, because the dividends is a portion of the profits that the company pays to us, we are the champions of the world. No, okay. Anyway, so when the company pays out a dividend, it's a portion of the profits to the investors. Don't worry about these comments. I'm interested in what you got to say. Keep going. All righty, Rachel. So that being said, I want to see a good quality stock, which means they've consistently earned money and they're consistently sharing the money with their shareholders. Okay, so over the 9,600 stocks that are available, only 300 make my list. You get the Dividend Kings. That's 54 companies that have consistently increased their dividends for 20 years or more. The Dividend Champions, the Dividend Aristocrats, both of those lists, 25 years of increased dividends. That's over 150 stocks right there. Exactly, Joe, the Dividend Aristocrats. And the Dividend Contenders, 10 years to 24 years of increased dividends. You guys have to decide at what point am I okay? Some people like 10 years of increased dividends. Great. Some people like 20 years. Great. Some people will only invest in the Dividend Kings. Walmart blew my socks off. I saw their chart for the first time in its crazy steady growth. Well, alrighty, Joel. SC wants to know what Walgreens is going to do tomorrow. SC, hold out. We'll take a look at Walgreens as soon as we look at VRT. But as I was saying, if we know when the stock is going to move, great. Well, let's take a look at it. 2 weeks before the dividend date. What is the chart telling me? What is the numbers telling me? And what do I mean by the numbers? Well, what I mean by the numbers is, what can I buy it for? Okay, see up at the top, let me get rid of this right here. The first thing you're going to see when you put any stock symbol in are the numbers. Okay? The last trade was 78.59. That number is going to live in infamy. Somebody's going to write it down. In 10, 15 years, you want to look at, hey, what did VRT close at on the 24th of July, 2024? That number will always be there. Okay? The bid, the ask, What can I buy it for? What can I sell it for? The open, the high, the low, the close, and the volume. How many shares were traded today? All this information is going to be available and it's going to be stored somewhere forever. So how you use that information could be valuable. I use it to tell me how often a stock has moved in conjunction to the dividend. That's where I found out that information. Okay, if the dividend's coming up and the stock moves up, well, great. I want to know that information. And if it does it 10 years in a row, well, great. Maybe it might do it 11 years in a row. Okay? So that's the kind of information I want to look for. First thing you're going to see, the last, the bid, the ask, the high, the low, the close, the open, all the volume. Those are the numbers for the stocks. But you want to go just a little bit below to the option chain, because the option chain is selling stock options. And I didn't understand stock options at first, but once you understand them, it's like, holy cow, can that be real? Let me show you. Just hang around a little bit tighter, and then we will show you some of the numbers, and you'll say, oh, how can that be? Because it's kind of amazing. Can you imagine that, getting 50% or more per year on a simple, predictable trading strategy? All right, let's take a look. The stock we're looking at now, VRT, Verity Holdings. I've never heard of them. Oh, well, we still have until Friday. All right, King, Jessica King. Did you see Siri today? Man, if I didn't do a covered call, I'd be up on one night. Okay, Jessica, you really can't think that way. Okay, there's two ways of looking at it. Are you looking for safe, secure, predictable income, or are you looking for stock appreciation? You can't really have both. I sold my calls on Siri a couple of days early myself. Oh well, still made a profit. Steve, you know what they say, profit is profit no matter how big, no matter how small. And nobody ever went broke taking profits. I prefer the consistency of 1%. I really don't care how high the stock goes, because the stock goes up, the stock goes down. You have to figure out where you're selling before you even buy. Okay, you like VRT, great. It's at 78.59. Where do you want to jump on the merry-go-round? How long do you want to stay on? Those are the answers you have to come up with to see what kind of profit you're going to walk away with. Now, I'm at that point where I need consistent profits, because my little nest egg gives me X amount per week, and X amount per week takes care of all my bills. So if I got less than X amount per week, I'm going to have to go get a job, and I really don't want to do that. I've been working since I was like 13. I think I'm due a break. I'm not too upset. Still got 1.6%. Well, all right, Jess. Thoughts on SoFi? SoFi is a big fat no. They just don't fit the parameters. There's so many other better companies than SoFi. James, can you buy the stock and sell the call in 2 orders? Can you show us? Oh, you want me to do a couple samples? I'll do a couple samples, but let's keep going through the numbers. PGR, never heard of PGR. PGR. Wait a second, I haven't even gone through this one yet. So hold that thought. Let me go through VRT first before we move on. Okay, so a couple of things I want to see. Very first thing I want to see, and it takes about 2 or 3 seconds. Seriously, 2 or 3 seconds. A quick glance at the chart. The high, the low, where was it, where is it, what direction it's going? Great. See, it's right here. The high's up there, the low's down here. I can tell by looking at the chart. It takes less than 2 or 3 seconds to figure that out. So nothing alarming. So I will move on to checking out the numbers. What am I looking at on the numbers? Well, number one, what can I buy it for? $80.50. See right up here where it says ask, $80.50. That's what I can buy it for. So what is the closest strike price? Well, there's 2 of them. There's the 80 and then there's the 81. Both equal distance apart. Which one is safer? Well, the 80 is safer, but the 81 is a possibility of a little bit more money. So that's an interesting question, because the 81, which is at 90 cents, which is over 1%, that's what we're looking for, but it also has a 50-cent stock appreciation built in, because if I'm buying it at $80.50 and I'm selling it at 81, well, my profit's going to be 50 cents plus the premium. I know it might get a little confusing, but the stock has to move up. Well, let's look at the 80. The 80's paying $1.25. Okay? You take 50 cents off that, you're still up 70. Is that right? You're up 75. And that's not 1%. Well, alrighty then. But it's a safer bet, because it's already past $80. So that's a choice. Do I want the safer bet at $80, or do I want the higher rate of return at 81? And at 81, the stock does have to move to the upside. Okay, so that gives us an idea what the numbers look like. Great. What's the chart telling us? Okay, so I want to open this up a little bit. First thing, always high, low. Where was it? Where is it? And what direction is it going? That's the first 5 things I want to see. Once I figure that out, let's go through the numbers. The bottom was 25.81, and that was a year ago. Topped out at the end of May, okay, at 109.09. From there, she's up, she's down, she's up, she's down, she's up, she's down. Now, can you see the pattern here? Where she goes down, up, down, up, down. It's almost a steady distance between the highs and the lows, almost. All right, so let's look at the last 30 days. Today's the 24th, so 6/24 to today. There you go. Okay, a month ago we're at 89.42. She drops, recovers, drops again, recovers again. Now there's a big drop today. Okay, so before you move on, I know nothing about investing, Rick. Well, nice to see you. Sethering, what is that? Sethering 316, am I licensed? Yeah, I got my driver's license. I went over the disclaimers earlier. I said I have no licenses in anything. I'm just a guy down the street who knows something I probably shouldn't. And I'm just sharing with everybody who wants to know. What am I trading? I'm trading dividend stocks to capture a premium, which is more than 1% on a weekly basis. So I'm looking to get a safe, predictable, consistent 1% per week every single week on my investments. And I'm sharing that here. All right, CHD. Let's, oh, CMG and IBM. Sheila, we'll get to that in a few minutes. We're finishing up with VRT first. So we know that VRT, the 81, is giving us our 1%. Great, fine. But is it the right time to buy? Look, she goes down, she goes up, she goes down, she goes up. Look at this big drop today. Well, based on past performance, this looks as if it's going to bounce up tomorrow. How much will it bounce up and how many days will it continue to bounce up? Don't know. Okay, Rick, you have 1,000 and I don't need. What do I do? Throw a pizza party. Invite everyone on the block. Get to know your neighbors. Honestly, dude, I can't tell you. I don't know anything about you. I have no idea what your plans are. No idea what your risk parameters are. So I don't tell people what to do. I just say, does it make sense? Find something you're okay with and you're okay doing and you can do and it makes sense. All right. All right. Thoughts on AbbVie? Ooh, I like AbbVie. We go back here. I'm gonna look at Sheila's in a minute, but this is my opinion, and only my opinion. Hold on, I gotta get this other camera running. So as I was saying, this is my opinion and only my opinion on what's gonna happen next. Because when you have a 30-day high, and I'm an investor, so trust me, when you have a 30-day high, there's a distance between whatever bottom and the top. Whatever bottom, whatever top you're talking about. That's a distance where the investor's saying, you know what? That's good enough for me today. All right, I'm done. Or, hey, that works. Or, hey, there's a new mortgage payment. Whatever the reason is, when the stocks go from low to a high, people like me and some of you out there are going to say, hey, that's a profit, I'll take it. Because stocks don't always go up. Let's zoom out of this one for a second. Okay, she went up, she went down, up, down, up, down, up, down, up, down, up, down, up, down. But she kept climbing, okay, but she kept doing the up and down, up and down, up and down. And then she's just starting to come back down again. That's all they do. They go up, they go down. So the best chance to make money on this little game that we're playing, take a look at the 30-day time frame. Because I only want to be in on Monday to Friday, which is only 5 days. Now this gives me an idea of what me and whoever else is looking at this company at this moment in time. Okay, we went down, oh, it's cheap down here, so we started accumulating. And then it goes from 69 all the way up to, what's that, 95? Yeah, there's going to be profit taking up there, because if the profit taking was good enough to me, it's going to look good enough to a lot of people. And a lot of people are going to say, yeah, that works for me, thank you. Nobody ever went broke taking profits. It's actually that simple. Nobody ever went broke taking profits. All right, so Sheila, you want to look at CMG and IBM? Let me get to the right place. CMG. Wow, CMG kind of dropped and kept dropping. All right. Let's take a look at the numbers. Now, I do own some CMG, just to let you guys know. Currently, the buying price is $54.07. So, if I wanted to do this tomorrow, I'm not 100% sure that I would, because tomorrow's Wednesday, which means we have Wednesday, Thursday, Friday, only 3 days left until the end of the week. Okay, it might be a better idea not to try to get your 1% this week, because your 2 big days are already gone, Monday and Tuesday. Now remember, when you do covered calls, most of your value is going to be time decay. So as time passes, the value of the option you sold will slowly disintegrate. So hopefully by Friday, you will be either bought out, option will expire, and you'll get to have all that cash to bring into the next week, so on and so forth. So it's very important to have the numbers work and have the right amount of time. Today, Tuesday, so if I did this trade tomorrow, I'd be getting the numbers here for the 26th. Okay, 26th of July. See those numbers here? So right now the 54 is going for $1.60. Well, $1.60 on a $54 stock, that's 3%. It sounds delightful. But there's only 3 days left, remember. So what does next week's 54s look like? So next week's 54s is $1.90. Yeah, I'd still go for this week. Because next week, even though you're gaining an extra 2 days, actually an extra 4 days, because Saturday, Sunday, Monday, okay, so the extra 4 days you're going to be picking up if you do next week's and not this week's. But it really doesn't make much sense, because the difference between $1.90 and $1.60, is it really worth holding it for another week? I would say no. I'll take the $1.60, thank you very much. But those are just the numbers from the transaction, buying the stock at the current price, which is $54.07. That's just the current price. Okay, so now I got to buy the stock, sell the option. But before I do that, what is the chart telling me? So I'm going to take a look at the chart and see what it says. Now, anytime I look at a chart, I'm looking for 5 things. And 5 things is really simple. High, low, where was it, where is it, what direction is it going at the moment? Fine. Now, considering it's not at the high and it's not at the low, it's somewhere in between, I want to take a closer look. Okay, now a year ago, totally different world than we're in, but 3 months ago, that's a little closer to right now. 3 months ago, what were the investors thinking? Well, look what we got. 63 going sideways for a couple of weeks, tops out at 69.45 on the 18th. Okay, from there, she just keeps on tumbling. So what's the last 30 days look like? Okay, what does that tell you? It tells you 30 days ago was a 30-day high. And what happens at a 30-day high? Well, usually it's profit taking. And look at it. It went all the way from 66, now we're down to 51.78. We're actually looking for a new 30-day bottom with CMG. Okay, now I got fooled and I thought this over here was the 30-day bottom because you have 2 days to the upside. Great, so I jumped in on Monday because I thought, you know, here's a 30-day bottom, 2 days to the upside, great, jump in. An invitation, but no, a false invitation, because yesterday and today are both lower than that 30-day low that I thought was there. So yeah, it could happen. But don't get me wrong, I had no problem buying it and holding on to it, and it gave me 4% this week, which lured me in, it suckered me in, so I fell prey to the green monster. Sorry, fell prey to the green monster. It happens. So that's one of the things you really got to get under control, is the greed factor. Okay, Chipotle is a hot stock. A lot of people buying, a lot of people selling. You know, today 39 million shares traded. Okay, 39 million, that's a lot. a lot of activity. Is this thing going to find a bottom, turn around, and go back up? Well, sure it is eventually. But when? When's that going to be? How long am I going to need to hold it? Well, I got 4% this week alone from this company. Great. So if I'm holding it next week, I got a lot of room to play. Okay? So I know it's a rather hot stock. I don't see it continuing to go down very much further, but we are going to keep our eye on it if that helps out any. Now, Sheila, you want to take a look at IBM also. IBM. Okay, let's move this back over so we can read these numbers. Again, very first thing, high, low, was, is, direction. Okay, that all checks out. Now let's check the numbers. If I'm buying it first thing tomorrow morning, 189.60. Okay, always look at the ask price because that's the price we'll be paying. China Sapra, dude, never heard of you. Okay, if I've not talked to you, I can't invite you to the live show. Sorry. If you really want to talk to the audience, DM me with your phone number. I'll give you a call. We'll chat. If you have a way of contributing to the conversation, great. More than glad to have you on. Other than that, don't want to talk about anything else. Sorry. Where was I? IBM. Okay, so the purchase price here at IBM, this week's option at 190 is going for $3. Are you kidding me? For 3 days? That's a nice premium. All right. Next week's 190, 350. Yeah, I'd definitely go for this week's. Okay, so we're gonna look at this week's. I'll slide this over. What's the chart telling me? So the numbers look good. All right, well over 1%. Remember, safe, predictable, consistent 1%. Ask yourself the question, do I like IBM? Okay, do I like IBM at 184? Now, if you're looking at any stock seriously, you should know whether or not that's a good deal. But you should know what's behind IBM. Well, they have almost 100 years of business. So how do you calculate 1% if it's 1% or less or more? Oh, that's a good question, Drazik. Okay, I'm going to show you in a second. Okay, so don't go away yet. We're still talking whether or not do I like IBM at this current price. So before you buy anything, make sure it's a company you do not mind holding for a long period of time, because you just might have to. There's no guarantee that if you buy a stock, it's going to go up or it's going to go down. It's going to go one way or the other. Okay? If you're kidding yourself thinking everything I buy turns to gold, no, it doesn't work that way. All right? But it's nice to have the odds and probabilities in your favor. So are the odds that I like. I like the fact they get a dividend coming up. That's why I buy 2 weeks before the dividend date. They got the dividend coming up, so great. Worst case scenario, I get a dividend, and then I got a company that continually increases that dividend every single year. I don't see a downside, but that's me. You guys got to make up your own mind. So if I'm buying a good quality dividend stock, and this one, if I'm buying it at 184, and I sell it to someone at 184, and I'm making more than 1% for the week, and it's a good deal, because you should already know what you like before you even do that. Sorry, getting my. Oh, by the way, I do have a new channel, just in case you guys were wondering, because here on TikTok, under the name Dividend Stock Talk, that's 27 imposters. So there's a good probability you will get an email, a text, a DM, or something from someone pretending to be me. Just part of the game, okay? I'm sharing free, valuable information. Other people are jumping on the bandwagon and want to use that for their own good, whatever. But here's what I'm saying to you now. If you really want to talk to me, DM me here with your phone number. I will call you back. That's what I tell everyone. Okay, if people leave their phone numbers, I'll give them a call. Other than that, I can't help you out other than letting you know there are imposters out there pretending to be me. So if you're unsure, always go to the side of caution. So as I was saying, I'm starting a second channel. The second channel is the 10-minute trader. Okay, so when I always start my videos out with, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. 10-minute trader is basically the trading strategy I created for my daughter. It had to be simple, safe, predictable, consistent. No way for her to lose. So, It should take no more than 10 or 15 minutes once you get it perfected. It's going to take time. Anytime you learn something new, it's going to take time. But you already know more about the stock market than you think you know. Okay, you know how to recognize a good company. Let me give you a quick example of that. Okay. I'm a little bit lost. Here we go. This is what I'm looking for. Okay. I'm going to rattle off some of these names, some of these green dots. Each one of these green dots represents a company that's ready to pay out a dividend. Okay, that's called the EX dividend date. Okay, it's the last day the stock trades before the dividend is paid out to whoever is entitled to that dividend. Now, there's a little misconception when I first started trading. I thought you needed to own the stock all year in order to collect a dividend. No. You only need to own the stock for 2 days. Okay, you got to buy it before the EX date and sell it after the date of record. So there's 4 dates to remember when it comes to dividend stocks. Let's pull one up right here. All right, 4 dates to remember. HP, Heimlich and Payne. Okay, 4 dates. Remember, 4 dates. The announcement date. Okay, that's basically we're announcing we're having our dividend. This is what we're paying. This is how much. Blah 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 blah. That's date 1. Date number 2, the EX dividend date. This is the most important one in my humble opinion. Okay, the EX dividend date marks the day in which is the last day the stock trades before they pay out the dividend. And those are represented by these little green dots. Okay? Each green dot is telling me when is the stock getting ready to pay the dividend. And usually that is date number 3, the date of record. So whoever owns the stock on the date of record is entitled to the dividend. So if you want to capture this dividend here on the 16th, you have to buy it the 15th, the 9th, the 8th, the 1st, the 4th, the 11th, any day before the EX date. Because any day after the EX date, well, the dividend goes to someone else, and you got to wait another 90 days. So this list here, okay, let's read off some, see if you know who they are. There's Ally Bank, Aon, ATVI, Wells Fargo, Capital One Finance, DHI, Siri, Louisiana Pacific Railroad, Visa, Apple, Jeffries, UPS, Kroger, Heimlich and Payne, Chevron, Moody's, Johnson & Johnson, Bank of America, General Motors, and Heinz Ketchup. Kraft Heinz. Come on, you know almost every one of those. Just to let you know, all these stocks here, those came from Warren Buffett's list. So, some stocks I do homework on, and some I don't. I don't do any homework whatsoever on anything on Warren Buffett's list. I know, it's kind of cheating. It is what it is. Warren Buffett's paid his dues. He's done it legally. Not like that Pelosi brought in most of those Congress people. I probably shouldn't say that. Put a bullseye on my head or something like that. Craziness. Okay, so take a good quality dividend stock, throw it into the calendar. The calendar tells you when to buy. Okay? Then make sure the numbers work. If the numbers work, great. What's the chart telling me? Is it the right time to buy? Okay, so yeah, they get the dividend coming up in 2 weeks. Great. It's in an upward trend. Double great. Okay, it's paying more than 1%. Triple great. Okay, and then just break it down. IBM last year was at 138.98. Okay, bottomed out in late October at 135.73. Okay, top of the year was 199. Now, if we, the buyers, think that IBM is worth more than $200, well, it would have hit $200, but it didn't. Now, we create this mess, okay? The company's the company. The company does the work. People come to work and they do their 40 hours a week. What do? We bet on the valuation of that company. That's all it is. The numbers go up, the numbers go down, okay? Now, she topped out, like I said, 199. That was back in March, all right? So take a look at the last 90 days. Take a look. Here we are at 168. She jumps up, she drops down. Here's a 90-day bottom. Okay, every time you change the chart, the picture changes. But I'm still looking for the same five things. The high, the low, where was it, where is it, what direction is going. Look at that direction. Almost anyone can tell you, look, she's going to the upside. Well, great, that's awesome. What does the last 30 days tell me? All right? Last 30 days tells me this is ready to come down. Why do I say that? Well, look where she was 30 days ago. 176. Sorry. Yeah, 174, 174.93. So that's almost like 176. All right. She drops, finds a 30-day bottom right over there, 170.37. Okay. Last week, she hit a 30-day top, 189.47. That's the 30-day top. What happens when you go from 170 to 190? That's a $20 increase. That's almost 20%. Well, hell yeah, I'm going to be taking profits. I don't know about you guys. Profit's not a profit until you take it. It may look good on a piece of paper, but you can't take that piece of paper to the grocery store and buy your groceries for the week. You can't fill up your gas tank. You can't pay your kids' college. You can't do anything with that paper, what do you call it, increase. It doesn't mean anything until you actually take it. Okay? But here's your 30-day high. Your profit taking has already started. How much more of it's going to go on before you jump in? Now, me personally, it's a little too high, too close to the high. I'd wait for it to come back down, all right, to find a new 30-day bottom. Because once you get a 30-day bottom, you got investors like you and me say, holy cow, look at it. It's this cheap. Let me buy some. That's what we look for. We look for opportunities to buy low, sell high. That's where you're going to make your money. Okay, so let's answer up some of these questions. I got, holy cow, 49 of them. So let's go, see what we got. AbbVie, we're going to take a look at AbbVie. Thoughts on AbbVie. So a couple people want to take a look at AbbVie. All right, AbbVie, ABBV. Now, I could go over this really quick, very first thing. Now, make a mental count in your head, because as soon as I hit this button, this is going to change. And then really quickly in your head, say high, low, where was it, where is it? High, low, where was it, where is it, what direction it's going? Cool. It looks pretty cool where it is, right? Great. What do the numbers look like? We don't need to take a look at the chart until we confirm that we're going to have a decent number. So if I'm buying it at 176.21, apparently the closest strike price is the 175. So the 175 is paying out $4. So if you add the 175 strike price and the $4 premium, I'm actually selling it for 179. Okay, so if I'm selling it for 179, I'm getting it for 176. Well, that's almost $3 profit. Well, that's over 1%. If I really needed to calculate the math, I could, but I think you get my meaning. It's over 1%. Great. Now we can take a look at the chart and see what the chart tells us. Well, I'll actually do an example of this one and show you how to figure out the ROI exactly. But let's take a look if it's a good time to buy this stock. All right. First thing, like I said, high, low, where was it, where is it, where it's going? Okay, a year ago, 143.19, bottomed out at 136.15, the beginning of November. Then it looks like, is that double or triple high? It looks like a pretty good resistance. Okay, at 183. Take a look back here in March. Hit it like 4 or 5 times over there in that area. All right. From there, here's our 90-day bottom. Do you see where the stock is at the moment? The stock is close to a 90-day high. So if you're a buyer and you buy something and it's at a 90-day high and you don't take your profits, that's your own damn fault. That's just my personal opinion. Sorry, I'm just got to keep the video recording going. And starting again. All right, so after I take a look at the charts, after I find out what it's telling me, because here it's telling me pretty plain and simple. All right, she comes down, 30-day bottom. Here's our new 30-day top. Yeah, this baby's going to turn any day now, because when you're going, in my humble opinion, going from 163 to 176, 163 to 176, that's $13. $13 on a $16 stock, that's a little bit less than 10%. Okay, it's still a nice percentage for a couple of weeks. So fine, jump on out, take your profits, and say thank you. See you again in the next 30 days. James, can I buy a stock and sell the call in 2 orders? Can you show us? Yes, I'm going to show you in a second. Matter of fact, why don't we do it right now? I missed a lot of questions. Sorry, guys. PGR. PGR is progressive. All right, we'll take a look at that in a minute. Okay, sit tight. We're going to do a quick little trade, so I'll show you how I figure out the calculations. Okay, now let's say hypothetically we like AbbVie at 176, and we're going to sell off the 175. So let me show you how you do it. Now we can do it separately by buying the stock first. Okay, buy 100 shares. This price right here. This is what it's going to cost me. Confirm and send. All right, it's going to cost me 8,000 bucks, 8,800. Okay. Then I want to sell the option, the 180 option, so I get to sell right there. And if I sell one, okay, so it's one stock, so it's one contract for every 100 shares of stock. Okay, so this one, if I sell this one, I make 194 bucks. If I'm making 194 bucks and it costing me 8,800, let's see. 194, okay, divided by 8,800, roughly, that's over 2%. Okay, great. Well, let's actually do one to find out exactly what it is. Now, when I say I like the 175, great. Let's take a look at the 175. First thing I want to do, I'm going to change it from where it says single, and I'm going to change it to covered call. Okay, let's get rid of this, so that's not confusing us anymore. Now here is the trade, not the trade grid, the option chain. It's set for 10 strikes, so that's 5 to the plus side, 5 to the back side. So let's change it to 8. Okay, now there's 8 of them. And these are 50-cent increments. So it's 170, sorry, $2.50 increments. 170, 170, 250, 175, 177, 50. 180, 180, 250, so on and so forth. So like I said, we like the 175, great. So I'm going to come over to this side where it says buy, because remember, one I'm buying, the other one I'm selling. I don't own anything at the moment, so I have to buy it. So if I hit buy, it automatically fills. Okay, and it's a double trade. Okay, it's buying the stock and selling the option all at once. Now I have mine preset for 10 contracts and 1,000 shares, but let's change it down to just 100 shares so some of you guys don't feel too intimidated. Now I always like to change mine to the market order because I have found that when the option trade and the stock trade are tied together as one trade, my profit is already built in and I already know what it is. So from here, I'm going to hit confirm and send. I'm not going to hit confirm and send again because then it would be an open live order. This is just a sample to show you how to do it. So very first thing you're going to see is that green line right there. And that's describing what the trade is. And I always encourage people to say it out loud so you can hear yourself saying it. Because the eyes can deceive you. And trust me, it's done it to me plenty of times. And I've been playing this game for 20 years. Okay, that's why I always say, have a paper trading account. Continue paper trading so that you get good at it before you put real money into the game. Now, I'm going to read the order out loud so it makes sense to me before I actually click the send button. All right, so I'm going to buy one covered call for AbbVie. The 100, which are the weeklies. I like weekly options. I like to get a paycheck every single week. That's why I do the weekly option trading. All right, from there, it says 26 July 24. That's just letting me know that it is going to expire this Friday. And it says 175 call, which is the 175 call, slash ABBV. It's two separate trades. And in parentheses, it says to open to open. Why does it say that? Well, it's two separate orders. I'm buying a stock order, buying a set of stocks, and I'm also selling an option order. So I'm opening one trade, buying the 100 shares of what we buy in AbbVie, and I'm selling the one contract. Okay, stocks are traded in New York. Options are trading in Chicago. Okay, two totally separate orders. That's why it says to open to open. So next line down is my break even. So the computer already did the calculation. So it's my break even. My break even is 172.01. Well, the stock price at this moment in time is 176. Okay, so if the stock price is 176 and my break even is 172.01, well, the stock can come down quite a bit and I'll still be profitable. Well, that's freaking awesome. I like it when it happens that way. All right, underneath that, the maximum profit I'm going to make off of this particular trade. And this particular trade is going to net me 300 bucks. Okay, fine. So what is that 300 bucks exactly? Well, the actual trade of the cost, including commissions, is 17,201. So let's take the trusty old calculator. $299, which is the profit. And I want to divide it by my purchase price, 17201. Comes to a grand total of 1.7%. Now, we all know if we get 1.7% for a whole year, well, let's multiply that by 52. Okay, that's over 90% increase for the year. That's 90%. How often do you get that? Okay, so the question you have to ask yourself, big, huge question. Number one, do I like AbbVie? Because remember, rule number one is never buy something you don't want to hold long term. So if you like AbbVie and the numbers work for you and the chart is telling you, yes, let's get out of this. Let's get out of this. Let's change that. And let's get back to the chart. If everything's telling you yes, in this particular case it's not, because look where she's going. The chart's going to the upside. Eventually, that's going to turn and come back down again. I never buy at a high, hoping for it to go higher, which is this instance at this moment in time. I'm just using it as an example. If I like AbbVie, that's what I can expect to get. Now, could it go higher? Well, yes, it could. But think about it. Okay, you had a 30-day time frame. Okay, that's 22 trading days, because there's only 22 trading days in a month. Okay, so 22 opportunities for this thing to go up or down. So your odds are 1 in 22. Is it going to make a new high? Because there can only be one high in a 30-day period. There can only be one 30-day bottom in a 30-day period. We already know where the bottom is because that's pretty much isolated all by itself over on the 3rd of July. Okay, 163.52. That's the 30-day bottom. You can't argue with that. So where's the 30-day top? Well, the 30-day top so far is on the 18th. That's 176.68. See it way up here? Okay, but right next to it, today, we hit 176.60, which is challenging that 30-day high. So are we going to make a new 30-day high? Or is that done and not ready to come down? We will find out tomorrow. It's a 1 in 22. 1 in 22 chance that that's going to go higher. Anyway, so that's AbbVie. Progressive, huh? Daily TikToks. PGR. PGR. That's a no. It's a monthly. It's a no. Sorry. Simone, how my friend? I got stalked. With WBA and Kohl's, I can't sell at any strike. Well, let's take a look at WBA Walgreens. Okay, just to let you know, I do have Walgreens. Okay? Just let you know. All right, so Walgreens. Quick. We know what the high is, we know what the low is, we know where it was, we know where it is, we know where it's going, because we've been following this one for quite a while. Now, if you're following a stock, well, you already know where it is. You don't have to go through the whole high, low, all that kind of crap. But when you're following one consistently, sorry, okay, what's the last couple of days? Because we looked at it this morning, we looked at it yesterday, last night, we looked at it yesterday morning, we look at it consistently. Sorry, I'm shooting videos. Come on. Gotta wait for that thing to clear. So, let's just take a look at what happened today. Come on. And action. Okay, so what we're looking at today is basically the same thing we've been looking at for the past couple of weeks. Okay, what is Walgreens doing today? Now, we heard a lot of news in the past couple of months. What's going on with Walgreens? Well, the current administration not enforcing crime. You have a lot of people that are just, robbing places blind. If it's under $900, they don't prosecute. Okay, so it's almost like free money, and some people don't care. Okay, not my generation. My generation, hopefully, doesn't do that kind of crap. Anyway, Walgreens. It's been in business over 100 years. Really ain't going anywhere. Major city, every major city has a Walgreens in it. There are even Walgreens overseas. So there's 8,700 different Walgreens stores all over the world. Now they're cutting back on 25% of them, so they're getting rid of lesser performing companies, and they're moving to a lot of online stuff, which is great. We all know that everything's moving online, wonderful, but some people still like going into the stores for the convenience. That being said, let's take a look at the numbers. Now, 30 days ago, we have our 30-day high, 1843. Okay, the day that it dropped on the 27th, the very next day I loaded up because I knew that Walgreens has been around for over 100 years. Well, that's a no-brainer. In every major city, great, that's awesome too. Now, they've consistently increased their dividends for quite some time until just recently, until this new administration policy of not, anyway, just recently they started decreasing it. Did I take it off my list? No. They've still been in business for over 100 years. Okay, it's not their fault that the current administration is not prosecuting criminals. Okay, they're letting people get away with theft. Anyway, I don't like talking politics, so let's get back to the thing. Now, we've been waiting. We've been watching this thing since the beginning of the year, and I've traded Walgreens a lot this year. We've been waiting for it to find a new 30-day bottom, and it did on the 9th. Okay, 6 days to the upside, great. Then she had a little bit of a pullback. Yeah, well, I bought some the other day at 11.60. Sorry, 10.96, and apparently, hold on, what do I have? Yeah, my average price, oh, sorry, I'm looking at Kohl's, wrong one, WBA. All right, so I'm at Walgreens at 10.96, and I sold off the 11s for 17 cents. That's a nice fat premium on an $11 stock. Okay, so great. It's going to disappear this week as long as she stays above 11. And at the moment, she's at 11.16. I don't see the problem, depending on where you jumped in. Okay, that's where I jumped in. So with that being said, you have to decide when is the right time to jump in. Because I had a few people saying, hey, this thing's ripe for bankruptcy. Well, it's an awful big company for that kind of talk. 8,700 different stores. It's not like it's 3 or 4 stores. It's not that easy when it's that large of a number. Okay? So, here we are right now, and you have to ask yourself a question. Do I like Walgreens? Some people won't like it because this is not just a 30-day bottom. This is a bottom for a 7-year period. It hasn't been this low in 7 years. So think to yourself, when do you make money in the stock market? Well, you make money when you buy low and you sell high. There's no doubt about that. But if she's at a 30-day bottom, you're not going to get much lower than that. I don't like buying at the top, so I have no problem waiting for it to hit the bottom, turn around, go back up again. Because that's all they do. They go up, they go down. They go up, they go down. Not only is the numbers important, but is it the right time to buy? In the last 30 days, they're telling me, look at where she is. She's been floating around this bottom down here for a while. Is she going to go up? Is she going to go down? Well, that's part of the game, isn't it? All right, let's go to another one. Simone, you want to take a look at Kohl's, huh? Kohl's. KSS. Kohl's. Ooh, another down day for Kohl's. And I have Kohl's at 23. Imagine that. First thing, always, take you 2 seconds, maybe 3. High, low is where it is. It's right here, but the low is way down here. Okay, so it's at 1985, which, by the way, was a fun year. I do have to admit that. Bon Jovi was hot. The Boss was freaking awesome. Anyway, 1773 is the bottom for the year. Right now, it's at 1985. Well, great. We have plenty of space to go to get to the 30-day. Get to the bottom of the year. So great. Let's move on and check out the numbers. Okay, so I can buy it tomorrow morning at $20.20. Here's something interesting I just noticed for those of you that have not noticed it. Okay, Kasem, what was that? Right? Kasem Square. All right, I'm looking at Kohl's, which is KSS. Now, the numbers that I'm looking at, the bid, the ask, the high, the low, the close, all that stuff. Take a look at this. The last traded price. See up here? The last traded price, $19.85. The bid, if I was going to sell it, $19.91. The ask, if I'm going to buy it, $20.20. Both the bid and the ask are higher than the last traded price. That's usually an indication that the market maker is going to push the stock up tomorrow. Usually. But not 100%. But I like, odds and probabilities. If it was the other way around, if they were both below the last traded price, that's the market maker pushing it down. All right, so Kohl's, $20.20. Check it out, the $20 is going for 25 cents. So by the time you deducted that 20 cents off there, you're walking away with a nickel. Yeah, no thanks. That's for this week's. Now, like I said, this week's only has 3 days left. You're not going to get a huge, great premium when there's only 3 days left. So if we look at next week's 20 is going for 57 cents, which is well over 1%. Even the 2050s are going for 36, which is over 1%. Great. So I definitely be thinking of next week's, not this week's. This week's is not really paying the number. But I do like Kohl's. Okay? As a matter of fact, I do own some Kohl's. So let's take a gander. A year ago, the high was $29.85. The bottom, which was in October, mid-October, $17.58. Look what she's been doing for the last 90 days. Okay, she's up, down, big gap down. Wow. Okay, so we have a 90-day high at 28.27. Okay. By the way, today's Wednesday. Is today Wednesday? That's happens when you get old, you forget things. So today's Wednesday, so tomorrow's Thursday. Ooh, it's only 2 days. Yeah, why are we looking at this week's? There's only 2 days left. Anyway, so it topped out at 28.29 in mid-May. Okay, big, huge gap down to have our 30-day bottom at 19.58. That was the end of May. Yep, Butters Wednesday. I've never heard of Butters Wednesday. What does that mean? Anyway, last 30 days, because that's what's most important to me. What is she going to do in the next 30 days? Well, 30 days ago was a 30-day high. She dropped, retraced, dropped again. Now we're at a current new 30-day bottom. Where's the bottom going to be? Well, we don't know until we get there. Now, today is the lowest it's been in the last 30 days. Great. What's going to happen? It's going to get to a point where we're going to say, wait a minute, it's worth way more than that. And then we should start buying and it starts going up. That's what happens. I have to change that so I can pivot it so you get a better view of the screen. So that's what happens. So it is a great time to be looking at Kohl's, but not quite buying it yet. So I'd wait till tomorrow or Friday to find out where's the bottom going to be. You know what I mean? The bottom's coming. So you guys keep that in mind for next week. We'll be looking at Kohl's. Fish and Chips Friday. Yeah, Neil. I haven't had Fish and Chips Friday in a while. Maybe it's a good time to do that. All right. So that's Kohl's. I do like Kohl's. Rick, I know nothing about investing. Rick, at one point in time, I knew nothing about investing. Okay, you do it one day at a time, and the more days you put in, the more you know. And be already looked at. Encourage more viewers. That's on US. Yep. $1,000 can be a real nice pizza party. Yes, it is. What type of person do I look for? Rick, I don't know I don't know what you're talking about, Rick. Because the questions, they come and they go, and you're expecting me to remember them, that's probably not a good idea. So every once in a while, payday's Thursday. Yeah, I remember that. That used to happen back in the day where, Wednesday was Prince Spaghetti Day, Thursday was payday. No, wait a minute, Friday was payday. It depends. Can you walk us through to create the order? Yeah, we already did that. All these questions. Thoughts on Consolidated Edison? Now, don't get me wrong. Consolidated Edison is a great company. It's been around for over 200 years. But they have, their options are monthly, which means I don't do Consolidated Edison because I can only do it 12 times a year. And 12 times a year is not as good as 52 times a year. So that's why I don't do any stocks that are monthlies. None. Today's Wednesday, yeah, sorry about it. What broker do you use right now? I'm using Think or Swim, which is through Charles Schwab. How back do you look? Only a year. WBA, we already did that one. Using your methods over 50% annual, what risk do you face? Well, I risk tree falling on me as soon as I walk out the door. I risk getting in a car accident every time I jump in my car, drive to the store. I risk having a heart attack every time I do something I shouldn't be doing. There's risks everywhere. If you're looking for something specific, particular, I honestly couldn't tell you. Everybody has their own method of thinking. MPW tonight? Yeah, we'll take a look at MPW. MPW. So when you say what risks do I take the risk of getting old and pushing the wrong button. That's the risk I'm at. Thoughts on Consolidated Edison? Now, don't get me wrong. I like Consolidated Edison. Unfortunately, they are monthly. Okay, I've already told you that. They have monthly dividend pay, not monthly dividends. They pay dividends quarterly, but they have monthly options, which means I can only do a covered call once a month, which is 12 times a year. The numbers just don't work with monthlies as well as they work with weeklies. With weeklies, it allows me to do it every week. Check this out. 26 July, well, that's this Friday. 2 August, that's next Friday. 9 August, well, that's the following Friday. 16 August, well, that's the following Friday. And every Friday, I can do this over and over and over again. Now, there's 300 different companies on the list that consistently increase their dividends and have weekly options. And trust me, for me, now this is just for me, 300 is more than enough that I need to choose from. Because remember, all my lists are categorized by the calendar. That's it, the calendar, nothing else. Because as long as the EX dividend date is posted here on the calendar and I jump in and I buy it 2 weeks before the EX date, the stock has a tendency to move up. And I'm only looking for that 1%. I don't want to be greedy. Okay? Now, I started out years ago, I looked for a higher percentage rate, 2 or 3% per week. Well, it's less hit and miss. Okay, 1% was more consistent. Okay, 1% is over 50% per year, and I have enough money saved up that 50% per year that I gain actually very nice lifestyle that I live. I come and go as I please. I get to do whatever I want. My bills are all taken care of. I have nothing really to worry about, except when my grandson gets older. He wants a car, or he wants this, or he wants that. Yeah, so hopefully I'll be teaching him so he can do it himself. Good earnings should get your money back tomorrow. Okay, thoughts on Consolidated Edison? All right, J-Ball, where he said Consolidated Edison is a no only because it's monthly options, not weekly. What about earnings? All these just reported today. Okay, fine, what about them? Earnings don't have a whole heck of a lot to do with the company themselves. Hear me out before you snicker. Okay, have to do with the company themselves. So here's a question, MPW. Can you tell by looking at the chart when they had earnings? Most likely not. Do you really think Sally, the secretary, Pete, the plumber, or Joe, the carpenter, really cares about the movement of the stock? When I worked for a big, huge company, one of those big corporate jobs, many decades ago, I was 100% oblivious to the earnings reports, the stock price of the company in which I was working at. I still came to work, worked my 9 to 5, 40 hours a week. I didn't pay attention to this. So do you think the people working at these companies really care whether or not the stock is up or the stock is down? No. If you work at Siri or Kroger, if you're a bag boy at Kroger, do you really care that the stock price is up or down? I mean, seriously, ask yourself that question. I've never asked. Okay, you go to the grocery store and say, hey, how do you feel about the stock being down today? Is that going to affect you? You have less hours you need to work today and you still get paid the same. Those topics don't come into conversation because they don't mean nothing. The stock price is direct reflection on what we think. Okay, nothing to do with the reality of the company itself. Yeah, the company's profitable, big deal. Okay, the company's not profitable, big deal. Are we buying it? Are we not buying it? Am I buying it? Am I getting that 1%? Is she bouncing off of 30-day bottom? Is it getting to a 30-day top? These questions have nothing to do with earnings. But you know what? If you're comfortable waiting to after earnings before to jump in, great. I've seen positive earnings where the stocks go down. I've seen negative earnings where stocks go up. So there's no real rhyme or reason. There's no predictability when it comes to earnings. Where I found the predictability is when they're paying their dividend. Because they pay their dividend every 90 days. What the hell is it? Every 90 days. Okay, so I will look at Kroger every 90 days. It is actually week July, August, so it's 4, 5, 6, 7. Kroger is actually in week number 7 of the quarter. Okay, well, it was in week number 7 of the first quarter. It was in week number 7 of the second quarter. Now we're looking at, this is the third time I'm looking at Kroger, because Kroger's coming up in August. Okay, so I won't look at Kroger in July. I won't look at Kroger in October. I'll look at Kroger in August when they have their dividend coming up, because stocks have a tendency to move up before the dividend. So if I'm looking at a stock, Kroger in particular, I want to buy it 2 weeks before. So if the dividend is here, I want to buy it on the 31st of July. Okay, because that's a Monday. 31st of July, play it out for the week, see if I make my goal, my 1% goal. Yep, I did already. All right. Are you on WhatsApp? No, Tom, I am not on WhatsApp. I don't do WhatsApp. I don't do Telegram. If you want to talk to me here. Okay? Here works perfectly fine for me. On the call side, what is the strike price of 185 pays 520? Does that make sense to be more than 185.50? Okay, I'm assuming we're not talking about MPW anymore. The 185, which one is he talking about? Damn it. Sorry, I don't remember which one he was talking about. Mikey G. Have you talked about Cass giving out 80? Nancy, I've never heard of Cass. And usually, if there's a stock I've never heard of, usually means it's a no. And this one is a no. Why is it a no? Because it has monthly options. I cannot get a weekly cash flow from a company that only has monthly options. The numbers just don't work in my favor. Sorry, kiddo. More questions. Sheila. Is implied volatility calendar a good source of use? Can it help with picking what options to trade? Well, implied volatility only gives you an idea of how many stocks are trading. What kind of financial advice, how can you financially find that useful? Because implied volatility just tells you how many people out there looking at it. I'm not 100% sure if that's a good indicator when to jump in and when to get out, and whether or not it's going to give you your percentage. What trade platform are you using? Mind, Body, Wallet, Budget? That's Thinkorswim. That's offered through Charles Schwab, and no, I don't get paid for promoting it. What if all over it's high? Well, think about it, TX Tim. All right, stocks go up, stocks go down. See this one right here? See what's up here? You're always going to have a high, no matter where you are, no matter what you're looking at. This is a 1-year chart, so we see the high for the year. That's the high for the year. Now, if I change it to a 90-day chart, look, the high for the 90-day period has changed. And if I change it to a 30-day period, well, it's changed again. So every time frame that you're looking at is going to have one high and one low. Lost all my profits for the past year today. Not a day trader, holding positions for a year plus. Okay, XBB, I honestly don't know what to tell you there, brother. Okay, now this is the first time I ever saw your name, so I'm assuming this is the first time you ever been there. Okay, so remember, you're playing the game. There is a chance you're gonna lose. Okay, you jump on the dance floor, you either know the tune or you don't, or you fake it. Okay, the stocks move up, stocks move down. The idea is to buy it low, sell it high. Well, how do you know? Well, you know by education, taking a look. What are the numbers telling you? What is the chart telling you? What are we, the buyers and sellers, telling you? Well, from what I'm looking at here behind me, okay, she went up, she pulled back, she went up. Once she's up that high up there, yeah, there's going to be profit taken. Because you're going to have guys like me and guys like some of these people in the audience. When you see a profit, wait, from 39 to 47, that's a 49.37. That's an $8 increase on a 40-something dollar stock. That's almost 15% in less than a month. If you see this happening, okay, you say, well, hell yeah, I'm going to take my profits. Because it's not a profit until you take it. And nobody ever went broke taking profits. So it's reading a chart's really not that difficult. And once it gets up there, think of yourself as a buyer, okay? Well, it just came down off of this bottom here at 39. Okay, great. I bought it at 39, and now it's at 47. Well, that profit's not mine until I take it. Could it go higher? Yeah, it could. Could it also drop? Yeah, it could. Guess what? It did. Okay, if you don't take your profits, the market maker will take it away from you, or somebody will take it away from you. Because it ain't a profit until you take it. And once the stock hits a 30-day high, well, tipping season is coming. Because nothing goes up all the time. All right, so Cass is a no. Sorry about that. 83 questions, holy cow, and I just missed a whole bunch of them. AbbVie is too expensive, the momentum. How's it going? What's the topic for today? Larry Brown. What's the ticker symbol? I'm just jumping in. Can you give me a short list of monthly dividends, like 4 good ones? Oh, 4 good ones. Macy's, Walgreens, Nordstrom's, and Kohl's. Oh, there you go. That's not a suggestion, not telling you to buy. That's not what I did. That's just, rattling off 4. They just happen to be nice to me this year. For a minute there, I thought I saw something that I didn't see, but it's not there. Okay, so let's go over some of these more of these questions. I split coffee on my keyboard. Oh, hell. Even not pay 1%. I have no idea what that means. Larry Brown, that's not what he does, but people like Glad and ET. Yeah, I don't do Glad and ET. ET, wave, that's not that bad. WBA not pay 1%. Yes, it did. I jumped into WBA this morning. Okay, at 11.60. Okay. Ricey, never heard of it. Hulu, never heard of it. I've never bought stock before. What website can I go to start? All right, Justin, you're new here. Okay? You're new here, so my suggestion, okay, don't listen to just anybody online. I'm not even telling you to listen to me. I'm just saying do some research. Ask yourself, does it make sense? Never buy something you don't want to own long term, because you might have to. Never buy expecting you're going to get rich overnight. It doesn't always work that way. Do your due diligence. Check and make sure it's a good company you want to buy and you want to hold on to. What I do is I never buy something I don't want to hold long term. What do I mean by that? Well, if I'm looking at Macy's, well, because I like Macy's, I have no problem whatsoever holding on to Macy's long term. Macy's has been very, very good to me this year. Look at the trading range she had this year. She traded between 18 and 20 for the past 7 months, just perfectly staying in that channel. I made a lot of money off of Macy's this year. It's one of the stocks I continue to look at, and I have no problem holding on to it for long term. So before you buy anything, make sure it's a good company you want to hold on to for a long period of time. Make sure you can give a 30-second or a 40-second elevator pitch to anybody who asks, hey, why did you buy Macy's? Well, for me, it's easy. It's over 100 years old. The name recognition they have is just freaking ridiculous. Okay, they've had a couple negotiations for buyouts. I think 3 so far this year. Correct me if I'm wrong, but I think there was 3 buyout offers so far. They walked away recently. The stock dropped. Well, great. Stock dropped. I bought some more. Why? Because it gives me more than 1 or 2% every single week. They've been in business for over 100 years. They used to be on the what do you call it? A Dividend Kings list. But recently they had to cut the dividends because of theft. Anyway, let's keep progressing. Next question. Yeah, so Justin, my advice would be keep coming back, keep learning. If what I say makes sense, great. If not, go find someone else and just learn whatever you need to learn in order for you to say, oh, that makes sense. I can do that. All right? So if this makes sense, great. If it doesn't make sense, don't do it. And Nick, how's it going? Let's keep going with these questions. What are the best paying dividend stocks? I already said that. Hi, all. Winner 86 is here. See Pedro's. Then again, what if the stock starts to go up? Then you leave the sell call to be exercised. Well, that's the idea of it. The idea is to jump in on a Monday, be out on a Friday. Do I care if the stock goes up or not? No, I honestly don't. Would I prefer it to stay the same or go up? Well, of course I would. Because I want a safe, predictable, consistent return. The only way to do that is with a simple, safe trading strategy. That the stock doesn't have to go up. It can stay the exact same and I'll still make my money. I would prefer it not to go down, because if it goes down, then I have to hold on to it longer. Okay, the longest I've ever held on to any stock, and I've been doing this for over 20 years, is 9 months. That was last year with Kimberly Clark. Okay, yeah, I bought it, she dropped. I held on to it, 9 months, she finally recovered, I got out. All right. Dash Depot, how's it going? Assume you already talked about Ford stock. Okay. No, we haven't talked about Ford today, but Ford is at a no at the moment. The reason being, take a look at the numbers. Okay, when I say first thing I want to look at is the high, low, where was it, where is it? It's coming off of the high of the year. Yeah, I like Ford, don't get me wrong, but Ford is going to have to sit in the back seat until she comes back down to more reality. Okay, she almost hit 15, we're at 1360. It's going to come down to the 12 area before I start looking at Ford again. Don't get me wrong, it's on my radar. It's always on my radar. It's one of those companies made it to my list and it's staying there until, the perfect opportunity comes. And that, my friends, is definitely not now. Look at that run up from 1150 all the way up to 1475. I know it doesn't sound like a lot, but $3 move on a $10 stock, that's close to 30%. Okay, it's the numbers. Okay, and it's not the numbers like it's a $3 move. Well, it's a $3 move on a $13 stock. That's a big move. Well, it was $11 stock at the time. But a $3 move on an $11 stock, that's a big move. Okay, it's percentage-wise. Now, if IBM went from 170 to 173, well, that's not a big move at all. It's still a $3 move, but it's in comparison. It's percentage-wise. So $3 on an $11 stock, yeah, it's big. $3 on a $170 stock, yeah, it's not big at all. Percentage-wise, do the numbers. That's why when I say I look for 1%, I don't say, well, I'm looking to make it $5,000 this week. I don't say that because numbers sometimes intimidate people. People can understand 1% a week. 1% a week is 50% a year. Well, if I'm starting out with $50,000, 50% is $25,000. If I'm starting out with $100,000, well, 50% is $50,000. Okay, so whatever you're starting out with, think about, if I continue to do this every day, and you're just changing your schedule about 10 or 15 minutes. Okay, it's really not that difficult. You take a look. Either I like Ford, the numbers work, or I don't like Ford, and the numbers don't work. And then I go to the next one. Okay, I take a quick peek first thing in the morning. Okay, go to the market watch. What stocks are up for consideration? Well, Kroger, Heimlich Payne, Chevron, Moody's. Great, I'll take a look at those 4, and that's it. I won't look at anything else. Now, granted, I have about 7 or 8 lists. This is just Warren Buffett's list. Okay, here's my personal list right there. Okay, I got 100-year-old stocks, calendar spreads, dividend aristocrats, dividend champions, dividend kings, dividend contenders, Warren Buffett's list, so on and so forth. Those are all the different lists I use. And I use the list differently because I have different trading strategies for each one. But the only trading strategy I teach here is the covered call because it's simple, it's easy, it's less risk than anything else I can think of. And it was created for a 9-year-old, so it had to be simple, safe, predictable, consistent, all kinds of that, blah, 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 blah. Let's go, 14 more questions. Yes, Pedro, his goal to have the shares called away for the 1% goal. Yep. La 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 la. Look at all these questions I have. Tra la 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 la. Oh, Hollywood wants to look at AT&T. Well, do you now, Hollywood? Here we go. Yep, that's going to be a no. Wasn't that quick? I'm sure that's not what you wanted to hear, but take a look at where it is. Very first thing I want to see was the high, the low of the chart. Look where it is. It's at the high, almost at the high of the year. Why would I possibly be interested at AT&T? Don't get me wrong, I love AT&T. It is on my list. But I take one quick look at that chart, then you have that decision making in your head. How do I value my time? I already know it's at the high of the 30-day period. I ain't gonna do it. So why even bother taking a look at the numbers? So what if it's $19.10 and the 19's go for 22, which is over 1%, which is what I'm looking for. Doesn't really matter because it's going to be a no because it's too close to the 30-day high. First thing I want to look at, high, low, where was it, where is it? It doesn't take long to figure it out. There's your high, there's your low. Okay, yeah, no thanks. I don't buy high and wait for it to go higher. Okay, that doesn't work for me. I like buying it low, and when it turns around, it goes up. What calendar is that? All right, TX Tim. You can go to Google, Bing, whatever search engine you use, and look up dividend, EX dividend date calendar or EX dividend calendar. You find a whole bunch of them. You can choose one. Find one that works for you. I like the one that's attached to Thinkorswim. Okay, so everything I like in a trading platform is here on Thinkorswim. I don't have to go elsewhere. Well, I kind of do because Thinkorswim used to have fundamental analysis, and I could find the book value, but no, they don't have it anymore because old Chucky Boy took over. Why wouldn't everyone buy REITs that are primarily in MBAs with a 12 to 16% yield? Chip Melton. You know what, Chip? ETFs are wonderful for some people. Seriously, they are. If you can live off of 12 to 16% per year, not have any issues, hey, more power to you. Sorry, I gotta get the recording to go again. Come on, there we go. Come on. Here we go, and here we go. All right, so as I was saying, all right, if you're okay with 12% to 16% per year, fine, no problem. Me, I couldn't do it. Okay, that would mean I would have to go back to work and add more money to my little nest egg so that I could retire. Okay, but my little nest egg at 1% per week, which is 50% per year, allows me to live comfortably. Okay, now I've been working since 1974. Okay, when I was 13. Okay, isn't it time for me to take a break? Was that right, 74? It may have been earlier, I don't know. But old man Simmons used to pick us up right after school. Right after we got off the school bus, we'd go to his place, pick tomatoes, pick cucumbers, pick, butternut squash, and what's that big, huge one, the Blue Hubbard. The Blue Hubbard freaking thing's bigger than my head. Huge pumpkins, or squashes. Anyway, besides the point. So it's going to be a no to AT&T, so why even bother taking a look at all the numbers? Sorry, Hollywood. And yeah, for the ETFs, I don't do ETFs because they just don't pay. Sorry, Chip. Yep, Hollywood's got it right. This method gets you 1% per week. It's weekly. How about Mara? All right, let's take a gander at Mara and see what it says. Hello, I'm the operation of a listed company. Please, can I invite U2 Cooperation. Small cap, huge profits. All right, I'm not quite sure. Give me a second. Let's pull up Mara. I'll read your little thingy again. See if it makes sense the second time I read it, because it didn't really make sense the first time I read it. Hello, I'm the operation of the listed company. Please, can I invite you to cooperation? Still have no idea what that means. But I suppose you can invite me anywhere. Not quite sure where it is you want me to go. But let's take a look at Mara. What happened with Mara? First thing, always, quick glance at the chart. High, low, where was it, where is it? Okay, great, that looks fine. Nothing detrimental. So, the numbers. What am I buying it at tomorrow? 2073. Right at 2073. So the closest one is going to be the 2050. Okay, it's 2050 is going to be the closest. See it? At 2073, the closest is the 2050. How much am I losing? I'm losing 23 cents. Great. Take 23 cents off that 79. Well, now you're at 56. Well, 56 cents on a $20 stock. I mean, $20.50 stock. That's over 2%. And that's for 2 days, Thursday and Friday. So tomorrow morning, this is looking very appetizing, these numbers. 2% for 2 days. Great. Well, what's the chart telling me? It's telling me a year ago, we were at 1602. Okay, we dropped at the bottom of the year, the beginning of October. Okay, top of the year for us, for Mara, was 3409, and that was the end of February. She drops, finds a new channel to go sideways just about. See that? Now let's look at the last 30 days. What is the last 30 days telling you? Well, from looking at this, you could probably get third graders say, hey, she was way down here at 1850. She jumped up, pulled back, jumped up, pulled back. It's in a clear downturn at the moment. It's searching for its 30-day bottom. Look, 1, 2, 3, 4, 5, 6 days to the downside. Okay, 30-day high, 27.28. 1, 2, 3, 4, 5. 5 days to the downside. Where is going to be the bottom? Hello, I emailed you some time ago, but haven't heard since. How do I contact you? A person. Yeah, YouTube is not the greatest in the world because it's not the greatest in the world because I have so many other emails. TikTok is the one I do most of my interacting on because there's more people there. But I will go take a look at YouTube today and see what kind of messages I have, and I'll see if I can answer that for you. I apologize for not getting to it sooner. All right, that being said, let's continue looking at Mara. So, do we want to waste our time? Now, when I say, thank you, when I say waste my time, because I know I'm not going to buy it because it's coming down. All right, I'll take a quick look at it. Great. I'm waiting for it to hit the bottom. Where's the bottom going to be? Well, right now it's at 2067. It could keep coming down, and when it does, I want to be there. When it hits the bottom, it turns around, starts going back up again. Because what does Mara do? Let's take a look. Let's go back and take a look at the 1 year chart. Take a look at that, especially right here. Okay? Let's count how many times in the last couple of months. Up, down, that's 1. Up, down, that's 2. Up, down, there's 3. Up, down, there's 4. Up, down, there's 5. Up, down, there's 6. Up, down, there's 7. Up, down, there's 8. 8 times in the last 2 months. She went up, she went down. She went up, she went down. 8 times in the last 2 months. I want to find out. See, this is like a perfect example. Okay? 30-day top right there. She's coming down. It's going to find a bottom at some point. We're going to say, wait a minute, marathon at 19? Oh, hell yeah, I'm going to buy some. So I'm going to keep my eye on it. And as soon as it finds that bottom, I'm jumping in. All right, so I got 34 more questions to go. Let's go take a look at some. All right, so small cap, huge profit. I'm not 100% sure what you're trying to get at. So if you want to send me a DM, that way I can actually call and talk to you. We can actually have a conversation. Why is CSLK going down? I've never heard of CSLK, so I couldn't really tell you why. CSLK. Can't find that symbol. CSLK, yeah, can't find it. Sorry. Vinny, hey Tom, how you doing? Learn what you do. All right, Vinny. IBM, we already looked at IBM today. Do I have a course? Believe it or not, my course is like 15 years old, really old and clunky. But your best bet is just come back here. I'll teach you whatever you need to know. Are you open for collabs? Well, of course I am. Like I said, send me a DM with your number. I'll give you a buzz. I can either call you tonight or I can call you tomorrow. One way or another. I'm going to be up like 1 or 2 in the morning. FedEx dividend next week. So 12 covered calls in the next 3 business makes sense to me. Ford EX dividend next week. So 12 covered call in the next 3 business makes sense to me. Really? Yeah, well, she's at 1376. I don't see it hitting 12 for another 2 or 3 months. Just my humble opinion. Felix, James, how do you keep greed in check? That was a good freaking question. I want to get back to that question. What the hell was it? Oh, there it is right there. Felix, how do you keep greed in check? I want both premium and dividends and covered calls. It's all, Felix, it's all about the numbers. Be 100% honest with you. If you take a look at what you're jumping in at, what are you getting in the premium, what are you going to get in the dividend, how do you structure which covered call to sell? Okay, so if I bought Ford, right now it's at 12.10, right? The 12 is going for 32 cents. So you take the 10 cents off that you're going to lose. I think I managed TikTok you. Best platform. Okay. As I was saying, at the 12, right now, at 12.10, if I bought it at 12.10 and I sold the 12s, I'll make 32 cents. Now you take your 10 cents off of there. Do not much about it. Okay. So the 12's going for 32. I'll be walking away with 22 cents. 22 cents on a $12 stock is not bad at all. Okay. So you always have to go. Do the math on the 12. What am I making? The 12.50. What am I getting? Okay, the 12.50 is going for $1.18. Well, that's a big jump for 2 days. Do you really think you're going to get that? I don't think so. Because in the morning, these numbers are all going to change. All right. But it's always about the number, Felix. Okay, always do your math. What am I getting into? What are the odds and probabilities of me getting out safely with all my money safely intact and the return that I want? These are questions you need to ask yourself before you jump into any stock. Okay, but it always goes back to rule number 1. Never buy something you're not okay with owning long term, because you just might have to. Never sell at a loss. Make sure it has weekly options and dividends that have consistently increased. I personally like 20 years, but that's me. Okay, so let's go a couple more questions. Oh, look at this. Pederos, you want my opinion on Tesla? My opinion on Tesla is a big fat no. The reason being is Tesla is one of those companies that keeps going up, but they don't share their profits. So what does that mean? They don't share their profits. Well, I want nothing to do with them. If I'm not going to get a portion of those profits, why would I bother put my money into it? Because I'm at that point where I'm looking for cash flow. I'm not looking for capital appreciation. Okay, so do I sell calls with a limit or market order? I do both, and it depends on the situation. When I'm first buying, it's a market order. Okay, but when I'm buying something, when I'm selling a call against something I already own, I do a limit order. Okay, I like playing the game, but I don't trust the players. How's that? I like playing the game, but I don't trust the players. Do you still receive dividends on dividend payments day on the stock that tied onto the call play? Yeah, you do. As long as the stock is still in your possession. Just because I sell an option for someone to buy it from me, until the day they actually buy it from me, I'm still the registered owner. So as the registered owner, I'm entitled to the dividends. That's how that works. Whoever has the dividends, and whoever owns the stock on the date of record is the one that's entitled to the dividend. Macy's PE ratio is 404 as of today. It is insanely overpriced. Why do you advise people to buy that? Okay, YB795. I don't make any recommendations whatsoever. So I don't know where you got that misinformation from. I don't make any recommendations. All I say is, I like Macy's. I have no problem buying Macy's. If I buy Macy's, let's pull it up. Okay? So you cannot deny and expect me to believe you that Macy's has not been channeling for the last 9 months. Look at it. That's a clear channel right there. It's going sideways. Okay? You cannot deny that Macy's has been in business for over 100 years. You also cannot deny that Macy's has a New Year's Day parade, Macy's Easter parade, Macy's Thanksgiving parade, Macy's Christmas parade, Macy's New Year's parade. The name recognition that Macy's has is huge. Even if whatever their, what are you talking about? The PE ratios, 404? Okay, whatever that means. Okay, then this is for people who have no idea what it means. So let's take a quick gander at it. Okay, the last 30 days, here we are. Okay, now I like facts, I like figures, I like odds and probabilities. Okay, it is a fact that 30 days ago today, the opening price is $18.40. You can't argue with that. You also can't argue with, in the last 30 days, the high price is $20.48. You can't argue with that. And then, here on the 15th of July, you can't argue with the fact that she dropped down really big, the big, huge gap. Now, you also cannot argue with the fact that gaps have a tendency to fill, especially on a company that's over 100 years old and has big shopping malls, have a Macy's in it, in almost all the big major cities in the United States. Macy's has a very good name recognition to them. That's a lot of their value right there. Now, they've also had 3 opportunities for 3 buyout opportunities this year. Okay, I witnessed 2 of them. Okay, one of them they said, hell no, we will buy back our shares at 24. Now, if Macy's corporate is willing to buy back their shares at 24, the stock was at 22 at the time. I said, well, fine, I'm going to buy it at 22. If corporate said they're willing to buy back at 24, I'm not losing any money on a 100-year-old company. I don't see it going bankrupt. Yeah, they're moving online to get rid of some of the brick and mortar stores. So what? Everybody's doing that. But the name recognition, you cannot buy name recognition like they have. Huge asset. Okay, so now they walked away from another opportunity. So the very next day the stock drops. Well, great, I'm going to jump in. Why? Well, because I like Macy's. And they're going to pay me 2% on a weekly basis. 2% on a weekly basis, that's 100% a year. How can I not invest in that? The company's 100 years old. So question number 1, for me, do I like Macy's? Well, hell yeah, I like Macy's. Does Macy's have have weekly options? Yes, it does. Do they consistently increase their dividends? Well, they used to, until this new administration created havoc in the streets. Okay, well, when they're done and gone, they start prosecuting thieves again. Well, maybe the crime in the streets will stop and stores will start coming back again. Maybe. We'll see. Okay? Can't keep going the way it's going. So that being said, I don't mind owning Macy's. I don't ever tell people what to buy, what not to buy. Never, never, never do you hear those words come out of my lips. Okay? I said I like Macy's. What's best dividend stock for me this year? Well, it's been Macy's. Terribly sorry. Okay? I've made more money off of Macy's this year than all the other ones. All right, let's continue with some of these questions. Thank you for that, Wade. You're absolutely correct. I do not advise anyone what to buy. I always tell you guys, don't take my word for it. Do your own research. Okay, we're all adults here. Okay, I'm from that era where you're an adult. You take responsibility for your own actions. If I tell you I like Macy's, I'm going to go out and buy it, and then you think that I'm saying that's a good one for you to buy, that's on you. I don't tell anyone to buy anything. And I do have to clarify that often. What do you think about small caps? All right, David, don't get me wrong. I like any company that has consistently increased their dividends. I don't care if they're $5. I don't care if they're $300. If you are in business and you consistently be profitable, and then you take those profits and you share it with the investors, that's you and me. Well, great, you're on my list. I want to give you more of my money. Great. I want some of the dividends. I want some of the profits. Wonderful. I'll put you on my not my roller coaster, my merry-go-round. And when your turn comes around, then I will take a look at the numbers. And if the numbers work, I take a look at the chart. If the chart tells me it's the right time to buy, great, I'll buy it. It takes me less than 10 or 15 minutes to go through my own list, to do my own trading. And I'm just trying to share that with people. You either take it, you don't take it. But do your own research. Don't ever listen. Don't ever blindly listen to someone on YouTube or TikTok, whatever. XRP, that's a DCast. How are you? DCast, what the heck is XRP? Isn't that a no? Ripple. Yeah, that's a no, kiddo. I don't do cryptocurrency. AAL. First thing, always, always, always. Okay? High, low, where was it, where is it, what direction it's going. The high is way up there, 1750. The bottom is right here. Okay, we're actually at the 30-day bottom for American Airlines. So what do I want to do? I want to dive in and I want to see exactly what's happening there. How long can it take to learn to be able to work it for a living? Christopher, it was designed for a 9-year-old little girl. Okay, not insulting my daughter. I love her very much. I do. Okay, but she was not a Mensa student. Okay, she was just your average, everyday, normal little girl. It had to be simple. It had to be safe, predictable, consistent, and no way that she could lose. The strategy is simple. Stop making it more complicated than it needs to be. If it is a good company and you do not mind owning it for a long period of time, great. Make sure it's a good company you like before you buy it. Never buy something you don't want to own long term. Never sell at a loss. Make sure it has dividends, and specifically dividends that consistently increase. Because I'm at that point where I want a consistent cash flow, and I want it on a weekly basis. So you got to have weekly options, and then the numbers got to work. Okay, what am I going to buy it for? What am I going to sell it for? Am I making my 1%? Great. Now, what's the chart telling me? It's really not that difficult. Okay, first thing I want to look at, the calendar. When are they paying their dividend? Great, 2 weeks before the dividend. Next, what's the chart? Quick, high, low, where is it? Then, what am I paying for it? Well, here it says $10.18. The $10 strike price is going for 48 cents. But if I'm selling it at 10 and I'm buying it at $10.18, I'm losing 18 cents right at the top. That money's going to come from somewhere. It comes from the 48 cents that I'm collecting as a premium. That's like you're running to the store, say, hey, Joey, I'm running to the packet to get a 6-pack. What do you need? Oh, pick me up the 6-pack too. Great. He pays for the stock, 6-pack, whatever. And then he gives you let's call it a convenience fee. I call it a premium. So if I buy it at $10.18 and I sell it to Steve for $10 on Friday, well, he's going to compensate me. And the compensation I'm getting is 48 cents a share. Take the 18 cents off there, take the 18 cents off the 48, I'm walking away with 30-cent profit. 30-cent profit on a $10 stock is a 3% trade. So the question is, do I like American Airlines at $10? Okay, so that's the question. And that's always the very first question. Question number one. Never buy something you do not want to hold long term. Okay, so when I say never buy something you don't want to hold long term, make sure it's a good quality stock. Make sure you can give someone a 20 or 30 second elevator pitch as to why you own American Airlines. You should be able to do that. Okay, I've found that we adults have tendency to spend more time planning a weekend barbecue than we do on our own personal finances. Okay, investing really shouldn't be that difficult. Okay, now we all need to invest somewhere, somehow, because at some point in life, you're going to retire. And you're going to retire one of 3 ways. Okay, don't kid yourself that you're not. You're going to either age out which means you're so old, your boss says, hey, buddy, you're just too damn old to come to work. Aging out, okay? It happens to everybody. Walking out, number 2, walking out. Say, hey, boss man, you can take this job and shove it. I ain't working here no more. That means you got enough money that you can live comfortably off of your investments, your retirement account. Or number 3, nobody likes this one. You get toe tagged, toe tagged out, dying on the job. It does happen. 3 ways you're going to retire. You're going to walk out, you're going to age out, or you're going to get carried out. One or the other. It's going to happen. Okay, so you got to figure out where your money's going to go. Who's going to take care of you financially when you get to that? I can comment here, but not on TikTok. Okay, that works. What was I saying? Oh my. I am completely right. Thank you very much. So you got to figure out, do I do it myself or do I hand it over to someone else? Well, I'm sharing all this information here publicly because this is going to be archived. Okay, this will be on YouTube forever. So hopefully when it comes time for me to actually open my own company where I actually do investments for people, they'll say, hey, wait a minute, let me go back and take a look at some of these videos, which will still be available. Say, hey, this is what he's doing, great. So I'm actually doing my legwork now for a company that I haven't even yet started. Anyway, is what it is. So let's keep on moving forward. American Airlines, 10.18, the 10s are going for 48 cents. You do some quick math, that's 3% trade. Okay, great, it's a 3% trade. What's the chart telling me? Well, here's the high, the low, where was it, where is it, what direction it's going? Okay, the high was actually a year ago, 17.30. And she drops the end of October at 10.89. Well, looks what happened the past 6 months. Okay, 6 months she's had a high at 16.14, and the bottom was today. So if we're looking 30-day chart, where is it? 30-day, 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 right there. Okay, here we go. Here's our 30-day chart. 30 days ago, okay, we opened up at 11.22. A week later, we got 11.41 as our high. Great. So what's happened? She dropped, retraced, dropped again. We now have a new 30-day bottom, and that's today, $10.12. I know some high school kids that can afford $10.12 stocks for American Airlines if you like them. And that's always a big if. Okay, so today is the 30-day bottom. But is it really? Well, we won't know until tomorrow, the next day. Because for me, I like 2 days to the upside. Okay, just because it's at the bottom now, there's a 1 in 22% chance of it going lower tomorrow. Now, why do I say 1 in 22% chance? Well, because every 30 days only has 22 trading days. Okay, because we don't trade on weekends and we don't trade on holidays. On average, each month has about 22 trading days. So there can only be one high of the 22-day period. It can only be one bottom. So we already know what our high is because it's already posted right there. But where's the bottom? Well, we don't know yet. It could be today. It could be tomorrow. It could be the next day. We don't know until it finds the bottom and starts turning around and then going back up. At that point is the time to jump in my humble opinion. So I will keep my eye on American Airlines looking for that little fish hook. Okay? You can call it whatever you want. If she drops, if this is the bottom now, tomorrow's an update, and then another update, that looks like a little fish hook to me. You can call it whatever you want. But a 30-day bottom is a 30-day bottom. And that's today at the moment. Tomorrow, it could go lower. It could. Don't know, but it could. Okay. Christopher, I think I answered that question. Okay. Ruby Tuesday Sandwich. Cube. No. R-E-X-R. No. E-X-R. No. 3 strikes, you're out there, kiddo. Sorry. Now, don't get me wrong. There might be absolutely great people that work there. Okay? QBE. Okay? Monthly. No. R-E-X-R. Monthly. No. EXR. Monthly. No. Why do I always say no to monthlies? Well, it's elementary. Seriously, it is actually elementary. There's 12 months in a year. And if a company only has monthly options available, that means I can only do it 12 times a year. And we all know that 52 is a lot better than 12. So if someone's going to ask you, say, hey, would you like to have 52 checks at 1% per check? Or would you prefer 12 checks at 1 or 2% per check? Well, it's logical. I like weekly because weekly pays more. It's actually that simple. So no, no, no. Maxwell, I'm new to investing. I want 15% per year. What will I suggest? Well, Maxwell, you're new here. Okay, I would suggest you come back another day, and then another day, and then another day. And then, if you actually absorb what you're learning, you'll think to yourself, well, hell, I don't want 15% per year. I want 1% per week, which is 50% per year. But hey, if you're okay with 15% per year, you can give your money to an ETF person. They'll give you 15%. But if you want to take your money, and invest it yourself and get up to 50% per year, well, this may be the strategy for you. It may be, it may not be. It's totally up to you. Okay, Carlos. All right, I'm new to investing. I want 50% here. You already said that. You but covered calls in the money or out of the money. Ruby Tuesday. I like in the money or at the money. At the money or in the money is always best for me. See, out of the money, the stock has to move up. But in the money and at the money, it doesn't have to move that much. It's always about the numbers. Hey, Damon, we already looked at Mara this afternoon. Let wait Monday. No idea what that means. Okay. Sweet 1-8. Damon, Sweet 1-8. I have no idea what that means. What are we looking at? Well, at the moment, we're looking at EXR, which is a no. He bought it at 9. Now it's up to 16. Okay, I can't really help you out with that one, Gary. Oh, look at that. I'm all caught up. SHW, really? You don't even talk or show live traffers. What? What is he saying? You don't even show live trades. You're a couch quarterback. Oh, so you're one of those. So you want to see live trade. Well, there's no live trading this time of day. Okay, so here's a live trade. Okay, and I do live trades every single morning. Monday, Tuesday, Wednesday, Thursday. We jump on at 9 a.m. Right as soon as the market's open, we are actually live trading. So this here, what you're asking for, I'm assuming, is a real trading account. Well, here's one right here, and here's another one right here. Okay, so they are all live trades. CMG, I'm into this one, the 22nd, 53.43, and I sold off to 53 calls, which is more than 4%. Okay, so I'm not 100% sure what it is you're looking for. So yeah, I do have live trading accounts. I have 6 different accounts. Mimo Flight, you're laughing at 4% per week. 4% per week is over 200% per year. See, no, I don't do that. Verizon, hold on a second. When do you do live trading? I do live trading in the mornings. Okay, we have a live trading group. You get a Zoom call every day, and we meet live, and you get to watch all the trades that I do. So if you're looking at what I'm doing, where are we? No. There we go. Okay, so here's my live trading right here. These are all the counts for, I forget who it was who wanted to see my live trades. Well, here are all my trades so far for this year. Whoops. Sorry, I gotta get this video up and running. All right, so here's all my trades for this year. Week number 1, week number 2, week number 3, so on and so forth. Okay, so as you're looking, okay, these are the trades I've done this year. 2 accounts here. Now remember, I have 6 accounts. I share 2 of them with you guys. Account number 1, 2.12%. See the date right here? 1 224. Okay, that was January 2nd. Okay, so this week right here, I only made 2.12%. Week number 2. Week number 2, Ford, Lowe's, Clorox, General Motors, and Macy's. Okay, great. Well, week number 2 is 1.3%. All the trades are right there online. You just got to look for them. So I find it very unsettling when someone comes on and passes judgment when they don't look at all the facts. How do I get a Zoom invite? Yeah, you got to go to the, all right, to get a Zoom invite, you actually have to go, heck are we? Right here to the live trading, and you have to sign up for it, okay? Live trading, join our morning trading group. It's right there. Once you click on that, that'll take you to Patreon. Yep, Dividend Stock Talk at Patreon. All right, so that was AT&T. Let's take a look at some more. So you buy the shares, sell the covered calls against them. Yeah, simple, easy, 1% per week. He also makes sure he gets the dividend payday. Not 100%. I hardly ever get any dividends. Okay, so buy shares, sell covered calls. Nope. This might be a little too complicated for you. Really? If Meme Lord of Light. Meme Lord might be too complicated for you. Okay, maybe, you never know. It was created for a 9-year-old girl, so you can't comprehend it. Can't help you out with that one. Sheila, if you're new, keep coming back. 9 p.m. every night. I started watching 3 weeks ago. I'm learning a lot. Well, thank you for that, Miss Sheila. Brian, he's not long calls or puts. His strategy is covered calls. Thanks, Brian. Well, back you up. All right, Divine Fires. Good evening, everyone. Hey, fascinating football. It's just getting here. Holy cow. We're getting ready to sign off pretty soon. But hey, better late than never, right? All the good people always showed up late to the parties. Yep. I remember in high school and after high school, all the good people showed up late. Nobody ever showed up on time. Anyway, so let's take a look at something else. So my Doubting Thomas has disappeared. Okay, I always get one of those. Always. Always someone has something negative to say. Fine, I have no problem with that. They say if you don't have enough haters, you're not working hard enough. Well, I got a bunch of haters. It's just the way it is. Some people just don't want us to know this kind of information. All right, so what do you guys have to look at? It is 11:15. We could call it a night, or how about we look at a few things on my list? Yeah, your iZone. I have no idea what that means. I'm fashionably late. Poseidon's last molar. We got 15 minutes left to go, and you're just showing up. You know you're doing something right if you get haters. Yeah, somebody I think it was Frank Kearns, for those of you know. Okay, I think it was Frank Kearns. I've been quiet tonight, Wildcat Sam, just taking it in, laughing at the new guys. Hey, somebody was once laughing at you, dude. So, you know, what goes around comes around. Yeah, man, your list, please. Hey, Brian, yeah, you got to show up on Monday in the morning trades for those. I actually saved those. Hey, you just look at the list I've already traded. They're already there. All right? Go back and take a look at the list, the stocks I've already bought. Not everyone's the same. You're absolutely right, Neil. Not everyone is the same. You're still yapping. Yes, I am, because you guys haven't given me something to look at yet. We got 15 minutes to go. I don't have my trusty book with me. I still get laughed at, of course. So give me something good. Let's take a look at something before we close out for the night. What do we have? Disney? Really? Why would we want to look at Disney? Ooh, that's why. Interesting. This is unreal. Sorry, Am. Explain the concept of covered calls so the new people understand. Concept of covered calls is you buy a good quality stock and you just hold on to it until it reaches your target. What's the target? Well, whatever I pay for it. In this instance, we're looking at Disney. And at this current moment in time, the price to buy Disney is $89.99 per share. Great. What is it giving me? Well, I don't know what the dividend is off the top of my head, but before I buy it, I would know. I always know all the details. But we're just looking at the numbers and what the chart's telling us. Okay, so if you like Disney, it's your responsibility to go take a look at the details of Disney. Okay, what are their options looking like? What is their cash flow looking like? How consistent are they with their dividend increases? Information that you need answers to before you decide to buy. Because you got to put your money somewhere. Do you have a list of what you're holding this week? Well, Dennis, of course I do. Now, I'm going to share with you just one account because I got too many to go over. This account is AEO, Bitto, Kohl's, Macy's, MPW, Walgreens, and Wynn. Okay, that's this week with that particular account. I have other accounts too. Well, hello to you too, Dennis. It's kind of interesting. Ask the question first, then say hello. Most people say hello first and then ask a question, but that's okay. So Disney. Okay, so the current purchase price for Disney is $89.90. Can't argue that. Okay, I like facts and I like odds and probabilities. Okay, nobody knows for sure, but there are good odds and probabilities, and that's what I like. You're welcome, Dennis. All right, so the purchase price, $89.99. So what can I sell the $90 strike price for? Well, it's only going for 65 cents. Okay, that's only 2/3%. That's just a little over 1%, less than 3/4%. Do I really want to do that? Well, the first numbers is a no. So do I really want to waste my time looking at, is it the right time to buy? Because I'm kind of curious at this drop right here. Because you're talking about Disney. Disney's been around for almost 100 years. There's a drop here, it's going to find a bottom eventually. But if it's finding a bottom and not even giving me 1%, why would I bother? That's my personal question. Now, Disney is on my list, but it takes me not even 2 or 3 seconds to say, okay, high, low, where was it, where is it? I like where it is, I really do. But the numbers are telling me it's not worth my time. So let's move on to something else. CTRN, never heard of CTRN. So usually, CTRN, if I've never heard of it, it's usually going to be a no. Sorry, that's a no. The reason it's a no is it's a monthly. The numbers just don't work out. I've never seen a monthly optional stock actually pay 50% or more. Okay, Verizon, VZ. Didn't we look at Verizon already? Ooh, no we didn't. I like this drop. Check it out. Okay, so very first thing I see. High, low, where was it? Where is it? Look at the drop. That caught my attention right there. Take you 2 seconds to see it. I mean, boom, it's right there. You take a look at the picture. Your eyes go to automatically what you're looking at. Well, high, low, where was it? Where is it? What's going on? I like it right there. I want to take a look. But before I do that, is it going to be worth my while? Only way to find that out, Verizon's at $39.62. So the closest one is going to be the $39.50. Now, this week it's only 33 cents. Not quite worth it. But next week, the $39.50 is going for 56 cents, which is more than 1%. Great. Let's take a close look at the chart and see if it's actually go or not. So a year ago, 34.05 bottomed out in October at 30.11, and that's the bottom for the year, 30.11. The top for the year, 43.45, and that happened in April. Okay, so from there, look at the movement that is made in the past couple of weeks. Okay, 90 days ago, she drops, retraces, drops, retraces. Look at the nice, steady movement that it has. I like steady, I like predictable. Now, take a look at the last week or two. That's right here. Well, I want to take a closer look at it, the last 30 days, because I want to get an idea of where it's going. And this looks good. 30 days ago, we opened up at 40.39. Okay, great. So what has it done lately? Well, retrace, back up, retrace, back up, retrace, back up, retrace, back up. Now here's the retrace with a gap to the downside. Now, when you have a gap like this, so close together, that's going to fill eventually. Okay, especially now that it's on the bottom side. Now it's coming out. Look, our 30-day bottom was on the 22nd, and that was 38.70. Okay, Tuesday, 38.72, a little bit higher. Today, higher. That's 2 days the upside, even though yesterday wasn't an up day. It was still higher than the bottom on Monday. So Monday's a 30-day bottom. Tuesday it's higher. Wednesday it's higher. Great, great opportunity to jump in. So the question is, do I like Verizon? Now let's take a look at seasonality. What does Verizon usually do this time of year? So this time of year, Verizon, for those of you who don't know what a seasonality chart is, take a look. Okay, off to the left, January 1st. To the right, December 31st. How does the stock react throughout the year? Great. The blue line, that represents the movement this year so far. The red line, that's 10 years worth of data. That's 2014, 2015, 2016, 17, 18, so on and so forth. Brings us up to this year. That's the average movement. I want to take a look at this area right here, because this is where we are. We're in the last couple of weeks of July, which is right there. So I want to take my little crosshairs right there, line it up, click and drag to the right. That's what the next couple of weeks are going to look like. All right? She's going to go up a little bit, pull back a little bit, and just basically go flat. I like that idea. No big moves to the upside, no big moves to the downside. Now that's historical performance. That's what it's done over the last 10 years. Is it going to continue to do that? Oh, we don't know. Okay, we only know that looking in the rearview mirror, that's what it's already did. Okay, so if it goes up 10 years in a row, well, maybe it'll go up 11 years in a row. Maybe it'll go up 12 years in a row. Seasonality doesn't do anything other than give us an idea of how it's already reacted over the last 10 years during this time frame. That's all it shows us. Okay? Nothing, no big adversary, no big, downturns. Just the way it's been going. Okay, so here's where we are. So the question is, do I like Verizon? Well, I do. Let's do a quick little trade and see what it looks like. First thing I want to do is I like the $40. All right, let's try looking at the $39.50, and we're not going to look at the $40. Wait a minute. Let's get rid of this one. Okay, the 40 is going for 30 cents. That's not quite 1%. But the $39.50 is going for 56 cents. So let's see what that one looks like. First thing I want to do is get rid of this chart. And I want to change this to covered stock. Now remember, I said I like the $39.50. So here's the $39.50 right here. Okay, I click on that, and this automatically opens up. Hold a second while I'm making new videos for my new website, The 10-Minute Trader. Because we're going to try a different approach with the 10-Minute Trader. So at the 10-Minute Trader, we have a little bit of a different approach. So for some of you guys that might like that, we'll be having another channel. So, but remember, anytime I tell you of one of my channels, I always say, if you really want to talk to me, send me your number and I will give you a call. Okay? So we're going to take a quick look at this. I'm going to change it from 1,000 shares down to 100 shares to make the number a little bit easier for some of you. Okay, because some people get a little intimidated. Now, anytime I do a double trade, now double trade is where I'm buying the stock and selling the option all at once. I change it from a limit order to a market order because the option and the stock are already tied together by the market maker. So I already know what my profit's going to be. If I do it individually, buy the stock first and then sell the option, I don't know what my profit's going to be. This is quick, this is simple, this is easy. I click that button, it pre-fills for me 1,000 shares, and then I do a quick check, confirm and send. What I'm looking at is the actual trade order, and I'm going to read it out to you, and then I'm going to do some calculations to figure out what kind of return it's going to get me. And if it works, great, we'll do it. If it doesn't work, then we won't do it. First thing I want to say is the green line right up here is the actual order. Buy one covered call Verizon 100. That is the weekly. To August 24. That is not this Friday because there's only 2 days left of this week. That is next Friday. So I have 9 days left before this option expires. All options expire eventually. So when you buy the stock, you own the stock until you sell it. The option, they all expire. So you really got to know what you're doing. All right. So if I am buying one covered Verizon 100, so those are the weeklies, to August 24th, that's next Friday, the $39 call option, because that's the one I like, and I'm buying the stock. So I'm buying the stock, and I'm selling the covered call all in one trade. The very last thing it says is to open to open. What does that mean? That means I'm opening two orders. One is a stock order, one is an option order, but I'm opening them both together because they're tied together. Very next line we're looking at, the break even, 39.04. That's break even. Anything over 39.04 is profit. Okay, great. Where's the stock right now? 39.62. Well, great. If it goes up, I make money. If it stays the exact same, I make money. The stock can even come down a little bit, and I'm still making money as long as she ends up above 49.04 come Friday afternoon. Because Friday afternoon, the options expire. That's my break even. Okay, so you should know this before you jump in. Underneath that, maximum profit for this particular trade is $45.50. I know it doesn't sound like a lot of money, but this trade takes a couple of seconds to do. You take a look at everything, read it out loud. Okay, so bring up my calculator, clear that. $45.50 is my profit for this particular trade. I divide it by what it's costing me, $3,905. So that is a 1.16% return for the week. I know it seems like a lot of time and effort involved in doing this, but once you get good at it, you should breeze through it in a couple of seconds. Let me show you a couple of quick ones so you understand how it goes. Get rid of that, delete that. Let's go back here, do this. Now, I'm going to do a couple of quick ones, and you can see exactly how fast you should be able to go once you learn what you're looking at. Very first things, you get your stocks, and then you look at when are they paying their dividend. Great. These are the ones I'm going to look at. So we're going to look at these right here, these four. Kroger, HP, CVX, and MCO. So that's Kroger, Heimlich and Payne, Chevron, and Moody's. Okay, so watch closely and see how quickly I go through it. This way you'll know it shouldn't be intimidating once you understand it. Okay, so the first stock is Kroger. First thing I want to do, go to trade, put in Kroger. Okay, high, low, where was it, where is it, what direction it's going? Great. Now let's move over to the, what am I buying it for? 54.31. The 54 is going for 82 cents. That's well over 1%. Great. What's the chart telling me? 48, bottom, high, low, last 30 days. Yep, that's coming down. That's going to be a no. HP, Heimlich and Payne. It's a monthly. Oh, it's on Warren Buffett's list. That's why. CVX is Chevron. 155 high, low. Where was it good? Cool. 155. The 155, 290. Well over 1%. Great. Okay, high, low, where was it, where is it, what direction, blah, 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 last 30 days. Awesome, take a look at this, 30 days, but there we are, 30-day bottom, 30-day top, coming down, turning around. So tomorrow, today was an update, great. Tomorrow may be another update, it may be a good opportunity. Chevron, tomorrow, awesome, great, on the list. Next, Moody's, MCD. Okay, high, low, blah, blah, blah. It's going to be a no because she's coming in a downturn. I'm going to wait for the bottom to find itself. So I just went through those four stocks. It took me less than 5 minutes. Now, reason why is once you put them into your calendar, okay, this is Warren Buffett's list. All right, great. It's Warren Buffett's list. He doesn't have a whole bunch. Now, I have over 300 I look at. All right. This is one of my lists right here. Okay, Wells Fargo, Citigroup, Intel, U.S. Steel, UPS, Apple, Visa, Starbucks, Emerson Electric, British Petroleum, Walmart, PPG, IBM, Clorox, Siri. I can keep going on, but you probably heard of every single one of those companies. Those are the only ones I look at. So the list that I have, I go through one list. That's all the stocks I want to look at this week. I don't want to look at what was last week, and I don't want to look at what's next week. I have 300 companies all squeezed into a 90-day time frame. Why 90 days? Well, because each quarter has 90 days. Okay, first quarter is January, February, March. That's first quarter. That's 90 days. April, May, June. Second quarter, again, about 90 days. Okay, July, August, September. Third quarter, about 90 days. And it's the same stocks over and over and over again. So I will look at PPG 4 times a year. I will look at Clorox 4 times a year. It's a no, yes or a no. And if I don't pick PPG or Clorox this week, well, maybe I'll pick BP, Emerson, Starbucks. Now, I do have British Petroleum, and I do have Starbucks. Okay? I don't have any Apple. But next week, look at the list. Next week's list is Kroger, Archer Daniels, ExxonMobil, Capital One Finance, Target, and then a bunch more. Can I pick one out of those? Well, yeah. That's what I do. I rotate the stocks over and over and over again. I will look at Kroger on the 7th week of the quarter, every single quarter. Okay, first quarter, Kroger, 7th week. Second quarter, Kroger, 7th week. Third quarter, Kroger, 7th week. Fourth quarter, Kroger, 7th week. Same stocks over and over again. Okay, they have increased their dividends, so I don't have to worry about it. They have weekly options, so I don't have to worry about it. If it is on my calendar for me, okay, I've already checked the numbers. I've already checked everything I need to check. So out of the 9,598 different companies that are available, only 300 make it onto my list. And once they're on the list, I check. I check how often do they increase their dividends? How do they have weekly options? What is the book value? What is their profit margin? How consistent are they with their increases in profits? What is their year projection? All this information I do before I put into my calendar. So for me, it's in the calendar, great. You don't like my list? Well, let's take a look at this. Warren Buffett's list. I don't even check Warren Buffett's stock, because if it's good enough for Warren, it's good enough for me. That's plain and simple. Now, I won't copy U.S. senators. People ask me that all the time. Well, they do all this. Yeah, it's in my humble opinion, it's wrong. Insider trading is wrong. I want no part of it. That's just me. Sorry. All right. I look at Heinemann and Payne, Kroger, Siri, these companies on Warren Buffett's list. Great. Do they make sense to me? If it's good enough for Warren to hold, why not good enough for me? Okay. Now, I never would look at Siri normally, but it's on Warren Buffett's list, so that's why I'm buying it. If it's good enough for Warren, hey, why not? Now, we're past 11:30, so I'm going to go over these last few questions. I'm going to call it a day. So, Party Springs, about time you join us, buddy. All right, Dollar General, we'll probably look at it tomorrow. ALB, I love Able Mob, we're not going to look at it. CTRN's a no dividends, thank you. Eli Lilly's out of my price range. DX, never heard of them. PSEC always a no. SoFi, always a no. SCLU, always a no. You didn't finish explaining a covered call. Oh, okay, well, let me quickly go over a covered call. You buy a certain stock. Hold on. I've got to restart the video again. That's what happens when you're, what do they call it? Online influencer. I'm not quite sure how I fit into that category. But, you know, I get these weird looks when people say, what do you do? Well, I'm an online influencer. That's the way, you know, IRS puts me in a different coding altogether. So I have a lot of different pros and cons. Okay, so a covered call. There are a lot of videos on YouTube explaining what a covered call is. Basically, let me see if I can explain it easier. A covered call is where you look at a company, all right, and you decide, I like the company. We're looking at McDonald's at the moment. Do I like McDonald's? Great, I buy McDonald's. Okay, now, in order to do a covered call, you need a minimum of 100 shares. 100 shares equals one option contract. 2 option contracts, 200 shares. 5 option contracts, 500 shares, so on and so forth. There are calls and there are puts. I don't deal with the puts because remember the trading strategy that I taught my 9-year-old, simple, safe, predictable, consistent, all that kind of nice, neat, fun stuff. Simple, safe, predictable, consistent. Those 4 right there. Okay? Simple. Do I like McDonald's? Yes. Great. Fine. What am I buying it at? Well, at this moment in time, it's $254. Great. If I buy 100 shares, that's $25,000. Okay, that's 100 shares. All right. Now, if I'm buying 100 shares of McDonald's and I can sell somebody the rights, not the obligation, but the rights, because call options give you opportunities, okay? It's not an obligation. A put option does have obligations to it. I don't like put options because when I try to teach it to a 9-year-old, it wasn't that simple. So this trading strategy, safe, simple, predictable, 1% per week. It has to be safe and simple. All right, so that being said, if you buy the stock at 254, I have to keep looking at the number, at 254, I can sell the right for someone to buy it from me at 254. And they're going to pay me with a covered call. The closest one they have is 255. Okay, and the 255 is going for $4.70. So, simply put, am I making my 1% on this week? Well, of course I am, because 1% of $254 is $2.54. You just move the decimal point over a couple of places. So a covered call for this one, I'd buy it at 254, sell someone in the right to buy it from me. Sell them the right, not the obligation. That means they don't have to buy it if they don't want to. If it goes up to 256, they can decide to buy it. If it goes to 255.01, they may not decide to buy it. It all comes to a numbers game. What am I buying? What am I selling? Where's the leverage? What is my rate of return? These are questions that people are asking when they're buying and selling stocks. Okay, so a covered call. You buy the stock, you sell someone the right, not the obligation, through what is called a covered call. So, I like weeklies. 26 July, that's this Friday. 2 August, that's next Friday. 9 August, that's the following Friday. Every 7 days I do it. And I look for that 1% return. So is McDonald's giving me 1%? Yes, it is. Because at 254 to 255, they go for 470. That's well over 1%. Great. And what else am I getting in this particular trade? Well, if it does go through, I get the difference between the 254 and the 255, which is another $1 per share. Okay, so it's all about Brian, talk Google it, bro. I have no idea what he means. Okay, so hopefully that's the explanation for the covered call. I buy the stock, I sell someone the rights to buy it from me at a certain price by a certain date. Now, when you own the stock, you own that forever until you decide to sell it. The options, you can buy them, you can sell them, but they have expiration dates, which means they expire worthless eventually. All right, so hopefully that answers that question. Let's go through a couple of the questions. I know ALB has earnings next week, 4.7, but maybe protective put against it. Sheila, well, number one, we're past 11:30, so I'm going to see, you know what, why not? I got nothing else to do. I slept all day. I wasn't feeling good after last night. I'm going to apologize for that. Every once in a while, I do get sick. I think I got sick twice this year. Okay, so ALB right here. You said something about buying a protective put. Well, hon, that's not something I teach here because it's not that simple anymore. When I say buy a good stock and wait for it to make its move, great, I like ALB. At this current moment in time, the 92 is going for $3.90. Well, that is close to a 4% trade if you like Albemarle. And if you like Albemarle at 92. Because look what it's done for the last 30 days. I say last 30 days. Well, this is longer than 30 days. This goes back to May. From May, end of May, she drops and goes sideways. I hate that sideways thing because stocks don't go sideways. They go up and they go down. But for the last 30 days, this is what we're seeing. We're seeing a horseshoe. She goes up, she comes back down again. There's our 30-day bottom. She went up, she pulled back. So it's still not quite at the 30-day bottom, okay? Because we're not quite sure what's happening today. Because yesterday and today, it's down from Monday's top. Monday wasn't a huge top, wasn't that big of a move. Okay, see what else we got. Oh, I missed a whole bunch of questions. All right, DX, never heard of it. SoFi, no. SCLU, no. Okay, PPL, I have no idea what PPL is. We'll have to, Mike, we'll take a look at that one tomorrow. So come back tomorrow night, ask that same question. Shiva Empire, awesome. You want to learn? Come back every night, ask questions. I'll help you out. That's what I'm here for. Gap fill, I love gap fills. Verizon, Brian, we already looked at Verizon. Nice appreciate the look at Verizon. How do you find a seasonality chart? Well, the seasonality chart does a little tougher to come by. Thinkorswim has one, which is owned by Charles Schwab. So I don't know who else offers a seasonality chart. Good stream. What platform you're using? This is Thinkorswim through Charles Schwab. You can go to thinkorswim.com and download it for free. They'll let you use it for a while. Covered calls, also known as wheeling, not necessary because wheeling does have the protective puts in front of them. Now, I don't teach that because it's a couple more extra steps, all right, and it adds to the time frame. So I do basically just the covered calls on the good quality dividend stocks. But you're right, the wheel is a good trading strategy to implement after you perfect this one. What app to buy stocks? I don't know which one you're talking about. Same to look at Intel for next week. Oh, Sheila, mention that one tomorrow morning. How do you know Warren Buffett's portfolio stock? Alexander, interesting question. Well, believe it or not, you can go to Google and put in Warren Buffett's stock holdings list 2024. And guess what? Google will let you know exactly what Warren Buffett has in his stock portfolio. Andrew, if stock goes down after you buy, do you keep selling covered calls on it each week? Exactly. Why wouldn't I? That's my cow. Let me give you my cow theory, Andrew. So if I buy a cow, okay, let's say it's a nice black and white cow, brown and white cow, whatever. Buy me a nice milking cow, and every week she gives me a gallon of milk. Awesome, wonderful. What happens if all of a sudden she gives me half a gallon? Do I get rid of the cow? No, not really. What if she gives me a quart? What if she only gives me a cup a day? Well, I already own it. So yeah, it's consistently giving me something. Okay, so what I don't want to do is just buy it and let it sit there and not bring in anything. Okay, then your money's just sitting there collecting dust, not getting any whatsoever. So yeah, if the stock goes down, I will follow it down with call options. But I like to go 2 to 3 strikes out of the money, so that way I give it a little bit of moving room. So I look at what the movement for the day. So if you look at this stock here, see where the movements are? So if I bought up here at 97, and right now it's at 90.88, well, I wouldn't be looking at the 91, 92, or 93. No, not at all. I'd be looking at the 95s or the 96s. I want to be far enough away from the action, but still bringing in something. A couple more questions. What if stock drops 2%? Do you keep holding and selling covered calls? Well, of course I do. Remember rule number 1, never buy something you don't want to hold long term. Rule number 2, never sell at a loss. Rule 3, make sure you have plenty of increased dividends. I like 20 years and weekly options. Well, I'm pumping out a lot of these videos over here. But, you do the videos, you also have to upload them, which I have to edit them, and I don't edit any of my videos. I don't know if you guys noticed, if you ever watched any of my videos, I don't edit anything. And there's the main reason why I don't edit anything. Because, my videos aren't as great as some people's videos, but at least they're honest, Hey, the doorbell rings, well, you're going to hear it. If someone's in the other room making noise, well, you're going to hear it. Is life always smooth and easy and simple? No, ain't. Life gets messy. So I don't edit anything. I don't waste my time with that kind of stuff. Terribly sorry. Now, if I had a production crew, maybe they could do it. But until then, it's just me. All right. MRK, Merck. Ooh, I like that one. Did he always pick the strike close to the money? Okay, Andrew, it's always about the numbers. Where is the best place? And where's the safest place to put my strike price? Okay, I know there's a few things I know and a few things I don't know. In this instance here, I know what the ask price is. I know what I can buy it for. All right, I know that. All right, I know what the premiums are. The $92 strike price, well, the premiums is $3.90. I know that information. Okay, what's the 91? Well, the 91 is $4.35. Is it a better return? It's a safer return. Okay, the further in I go. Now, if I go to the 90s, well, the 90s is $4.85. The price is 92. So if I buy it at 92 and sell the 90s, well, I'm $2 in the money. It's a safer bet. but the rate of return is less. So if the rate of return is less, am I still making my 1%? So it's a balance. And everyone has to figure out what their risk reward ratio is. Okay, so I have an opportunity, buy it at 92. At the money, 92 is going for 390. Okay, that is just a little bit below 4%. Just a little bit. All right? But at 91, it's $4.35. All right, so now it's not 4% anymore. Now it's almost like 3.5%. And then if I go into the 89s, well, the 89s is paying 535. If you add the 535 to the 89, well, now you're at 94.35, and I'm only making $2, which now I'm down to 2%. But it's a safer bet because the stock has more room to move, and if the stock has more room to move, you're less chance of getting caught with your pants down, so to speak. Make sense? So it always comes down to the numbers when you're doing the trade, but you're always looking at the same thing. Number one, is it a good quality stock? That's always number one. Okay, never buy something you don't want to hold long term. Number two, never sell at a loss. But always remember, there's an opportunity for the stock to go up and for the stock to go down. We don't know. All we can do is look at the odds and probabilities. Now the odds are, if all my brethren, my brothers and sisters that are buying and selling, sees this able mob coming down, looking to find a new 30-day bottom, well, great. I love a 30-day bottom, because what happens on a 30-day bottom? Usually, we start buying, and then she starts going back up again. Usually. Okay, because she goes up, she goes down. She goes up, she goes down. That's all they do. You're going to make your money when you buy low and you sell high. Simple, right? Got a couple more questions. 15. You guys got to stop with these questions. What's a good amount of capital to play with? All right, TikTok, what was that? 124.77? I honestly couldn't tell you. Okay? All I know is that 98% of all my money is invested at all times. Now I have a credit card and a debit card attached to my trading account, and it isn't a business account. So my tax is a little bit different than you people. All right. Also, I use my money to pay my bills on a weekly basis. I'm at that point where I live off my interest, and I leave the principal alone. The principal slowly increases. Okay. So let's continue. Price 2.8 for next week. All right. Brian, I think the earnings next week was looking at previous earnings data, but I might. All right. I'm missing some of these questions. What are you using on your screen for that data? Oh, this is Thinkorswim behind me. That's just a trading platform offered through Charles Schwab. Okay, it used to be a standalone brokerage, but it got bought out by TD Ameritrade a few years back. Then TD Ameritrade got bought out by Charles Schwab. So now Chucky owns it. If you see the volume taper off, you know you hit either a peak or a valley. Hassan Pfeffer, nice to hear from you again. Haven't heard from you in a while. And yeah, you're about right. The volume does have a tendency to give you an idea of how many people dancing on the dance floor. Macy's still give 1%, even at 17. Love it. Well, they moan. That's why I like Macy's. If the stock gets called away, will you buy it back? Well, that always depend on the numbers. Okay, see, now if you take a look at Macy's and you take a look at my trade history so far this year, you'll notice we're in week number 30. And out of 30 weeks, I may have had Macy's for at least 10 weeks. Okay, wait a minute, no. 20 weeks. Okay, so I've traded a lot of Macy's. Do you buy only dividend stocks? Sri, absolutely. Because non-dividend stocks don't give me a worst case scenario outlay. What do I mean by that? Well, if and when the stocks go to crap and drop to the floor, well, yeah, I want to be reassured that the company consistently pays dividends. And the companies I'm looking at, they've seen a lot of crap, and yet they are still increasing their dividends. They've seen COVID, they've seen the '08 crash, they've seen the Y2K, they've seen the Afghanistan debacle, all that crap that the economy is throwing at them, and they're still increasing their dividends. They must be doing something right. Those are the only companies I look at. A couple more questions and I'm done. Do you sell covered calls? Only sell covered calls. Careful not to get greedy. Yeah, you're right. Do you think Chipotle is going to go back up next week? Tell you what, WizTree, stop by tomorrow, ask that exact same question. Thoughts on Meta earnings? Nate, I don't do Meta. They don't share their dividends. Made 2,000 on boring and Delta puts. Okay, cool. Just starting. Great. What's your favorite stock? That would be Macy's. What do I think of ADC? Never heard of them. Do you buy dividend stocks at a certain period and sell them once they've got dividends? No. Now, Sri, what I'd say is come back tomorrow, the next day, learn some more. I'm here every night, 9 p.m. until 11:30. Okay? You want questions answered? Be more than glad to help you out. So I'm getting ready to call it a night. All right. Going to call it a night. You guys have a great day, and we will see you again here tomorrow night. Or should I go for another couple more minutes to finish up this video on the far end? Thanks again. You're welcome. All right, so we're done over here on Instagram. You guys have a great night, and we'll see you again tomorrow. And now, TikTok, you guys have a great night, and we'll see you again tomorrow. And over here on YouTube, done there. And you guys over here on TikTok, have a great night. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for that safe, predictable, consistent one